Good morning, everybody. Good morning and welcome to the room. Good to have you. Um, Cab, good to see you. Wayne, Pete, Roy, Gary, Ron, Cav, Claire, Better Dad, Todd, Pete, Lance, T45, Pete, Jared, Aaron, Erla, David, Andy, Jen, Sean Patel. Good to have you guys. Hope everyone's doing great. Your ninja charts are corrupted. Would I help you reset your charts? Aaron, will you do me a favor? When you say corrupted, what does it mean? What's it doing? Or what's it not doing? I'll see if I have a quick fix, but remember, the quickest fix is always let Jason take care of it for you. But it might be an easy one. Let me know what's going on, and maybe there is a way to do it. When you say corrupted, what's it doing? Is it not opening? No indicators? Is it a gray background? The small chart is not showing data. Have you tried right-clicking and reloading all historical? That would be the first thing that I did. Okay. Um, and that doesn't help. Is it gray? Is it red? Does it have the price bars? Show me a picture of your small chart. Please and thank you. And we're a couple minutes early. We got nothing but time, Aaron. I got no worries. Sometimes you have to right click and load a template. I said good morning, Better Dad. That's it. Sometimes, Aaron, for whatever reason, you need to reload that template. So if you right click and go to templates and hit load, depending on what market you're on, you probably need to put that Nexgen 5-1 Renko chart on there. It's all my thunder, Cav. I just let you guys borrow it every now and then. All right, let's see what you're working with, Aaron. That sounds good, David. Oh, Aaron, easy fix. You ready? So you have everything. This good chart scaling lesson. See that F right there? Click it. So whenever you see these things, but you don't have any data, um, and let me make it happen on mine. So what happened is you weren't, you weren't set up. So just click that F, boom, it'll always bring it back. And if you click that arrow, it'll always get you to the most current bar. So those are the two little fixes. True story, Aaron, I used to wake up in the morning before I learned that. And maybe the market jumped 50 points. And I would sit there in the morning going, where's the market? Where's the market? Where's the market? And then finally John Novak was like, dude, Mark, click the F. I was like, ha! Saved me like 32 hours a week. So good stuff. Thanks for asking that question. Um, just a little scaling issue. All right, guys, let's say as much as we can before David gets back. He's going to get coffee. Just kidding. We're going to do what we do, guys. We'll check news first. This is always my first stop with you guys. Forexfactory.com/calendar. And of course, Wayne mentioned it, guys. It is FOMC day. Today is Wednesday, May 28th. For you crude oil traders, there is not crude oil inventories today because anytime there's a holiday on a Monday, they move it to Thursday. So we're not going to see that today like we normally do. At 10 a.m., there's some medium impact news, that Richmond Manufacturing Index. Medium impact news can still disrupt your patterns a little bit. It's a little less likely than high impact, the red boxes. But I like to protect myself when I see that medium impact. If I'm in a trade, I'll make sure. It says FOMC meeting minutes. I don't know what the difference is, Jen. If I see FOMC and I see a red box, I'm not going near the market. Maybe there'll be less of a reaction, but that red box, yeah, lets me know there's going to be a reaction. I've never looked at that. I don't think I've ever gotten past FOMC. I see it, and it's an instant abused trader reaction. I've been hurt before, so I just don't go anywhere near it. But that's going on, guys, 2 p.m. So set an alarm. It's so easy, especially if your computer's set to Eastern and you're in maybe Central or Pacific, to forget about FOMC. I've done it and it cost me a couple $1,000s instantly. The market typically just really goes quickly in these high impact. So we check it every morning. Thank you, Gary. All the good stuff, guys, comes from the Nexgen page, specifically the trading guide and the trading plan rules. If you went through this and you just said, okay, here's the indicators I'm working with. I'm going to define trend and momentum. I'm going to recognize the termination condition. Here's my entry opportunities. Guys, if you keep it that simple each and every day, focused on what we call a high probability trend trade, you're setting yourself up for success. You're putting yourself in a position to take a trade that has been proven to win more than it loses, typically up to 70 to 80% probability. Um, you're taking a trade that creates confidence through that memory of success. And most importantly, and here it comes, you guys know what I'm going to say. Guys, it's going to teach you to read your indicators. I believe in the high probability trend trade 100% because this is your foundation trade. This is the trade that teaches you to read your indicators. This is the trade that's building that confidence. This is the trade that gives you a plan capable of winning more than it's losing as you learn to read your indicators. So the high probability trend trade, guys, this is our focus. And you're going to hear me say chart reading, pattern recognition 1,000 times today because chart reading is about 90% of your day. And I want you new guys to believe this, you new ladies, you folks, whatever. I don't know what's the proper term these days. Um, you're going to spend the majority of your trading day not trading, which sounds weird, right? Because we're all go-getters, alpha males and females. Humans will do. I like that, Jen. I'm all about the humans. Probably everybody in this room um, was brought up with the old adage that the harder you work, the more money you make, right? The harder you work, the more you move up. The harder you work, the more success you find. And guys, trading is this weird idea that very often the less you focus on working hard, the more money you make. The less you do, the more money you make. It's crazy because what you're going to do, the harder you work, the luckier you get. Yeah, that's true. Um, totally lost my train of thought. What you're going to find, guys, is that you don't have to work hard as a day trader. What you have to do is you have to focus on some rules, and your rules describe a pattern. The pattern's been proven to win more than it loses, guys. So what you're doing is you're looking at your charts, and you're waiting for an edge, and 90% of your day is probably waiting for that edge. 10% of your day is going to be actively trading. So what we're going to do this morning is we're going to focus on recognition of that edge, recognizing that pattern that's been proven to win more than it loses. And once you go through this basic, keep it focused. Don't look for all the trades, look for the best trade. What happens is you magically begin to recognize where the market is most likely to continue. This point becomes your entry for the trend trades. You're going to understand where the market is likely to go. This is going to help you with profit targets, and you're going to understand where the market is likely to stop. And where it's likely to stop is what we call a termination condition. And guys, you're going to know about, see it, recognize, identify areas on your chart that can stop the overall trend. And you're going to be able to choose not to trade into them. It's a pretty wonderful gift. A reminder as we get going that your first couple days with me feels a lot like this, guys, trying to take a sip from a garden hose or from a fire hose. It's going to feel like a lot of information coming at you. I know that. I've been there. I've been right where you are. But I can tell you, after day one, the language starts to sink in. Day two, you're like, okay, this is starting to make a little sense. Um, and then day three, you're like, oh, I get it. And now I'm going to start putting it together and I'm going to start learning to read these indicators. So give yourself a little bit of grace. You are new. But let's talk about the indicators because you got to know what you're working with, right? These are your tools. All it is a tool. We're giving you the world's greatest hammer, and now I'm going to teach you how to build a house. So the one thing that you'll notice is triggers. There are small triggers. These are the solid lines, and there are the large triggers. These are the dashed lines. When the market's going up, when the triggers are going up, they're going to be green. When the market is going down, triggers are going down, it's going to be red. Pretty simple. All you have to know about trigger lines is that these are small and these are large. You're going to use them to identify momentum in the market. You're going to use them to identify termination conditions, and you're going to use them to identify entries. But all you need to know is small and large. I approach this from a place of simplicity. And then you're going to have areas. Areas, I like to call them just horizontal lines that run across the chart, and I'm probably not doing my brother a service because he put a lot of work into these lines. The great thing is you don't have to know how he got them. You don't have to know how they were programmed. You don't have to know any of the mathematics to create Fibonacci. Learn their names. There's divergence highs. These are the magenta lines, and they print off of a pivot. And what it is it signifies a loss of momentum. So if the market goes up and then back down, this magenta line says, hey, guess what? There was a loss of momentum right at this number. And that line becomes kind of a line in the sand for the opposing forces. You're going to see Fibonacci resistance. That's that solid red line. Anytime the market's going up, this is a place that could create a bounce. This is a place that could cause a reversal. You're going to see blue Fibonacci support. It has the same ability when the market is trending down. You're going to see divergence lows. When there's a loss of momentum at a pivot, you see that divergence low. And you'll see yellow 1-to-1s. And these are magical little 100% Fibonacci alternates. And if the market's going down, they can behave as support. And if the market's going up, they can behave as resistance, guys. All of these areas are going to be on both the charts that you're looking at. Some of them can be market stopping lines, and some of them can just be places for entry. All you have to know is the names. That's it. So take this picture. You're going to get this PowerPoint at the end of the day. Take it, learn the area's names, because we're going to use them to identify 3 rules. That's it, just 3 rules. That's all it takes to get that edge with the high probability trend trade. That's it. That's all you need. So each rule, when true, creates an advantage. So rule number 1 says that the large chart, the 13-2, it has to have strong trigger lines. The advantage produced from strong trigger lines, we're just going to call it momentum. Rule number 2 says termination's false, room to profit target's true. That's just a fancy way of saying no termination conditions, guys. We need a clear path. That's the second advantage that rule number 2 is going to give you. And then finally, rule number 3 is where you're going to define your entry, guys. You're going to get into the market where the market is most likely to continue. Rule number 3 is specific to trend trades. There are tons of opportunities out there using the software. This entry is just for that trend trade entry. Once you understand momentum, once you can identify a market that has strong triggers, and you can say to yourself truthfully that my path is clear, you have everything you need to be successful with the software. You have everything that you need to create a very solid trading plan. Momentum and path, you're going to hear that a lot today. Momentum and path. Why was this trade successful? Because it had momentum and path. Why was this trade not successful? Well, it may have had something to do with not having a path or not having momentum. So I'm going to go back to these 2 things on every chart that we look at, and I'm really going to stress the importance. Learn these 2 concepts, and it's going to open your eyes to so many opportunities. These 3 rules happen on only 2 charts. And just to keep it even easier, guys, it takes 1 bar on your large chart. The large chart's a slow chart. It's hard to see change. It's a very broad stroke of a brush. Inside of that 1 bar, guys, that first printing bar, you're going to recognize the direction of the market, letting you know which way you should be looking for your rules to be met. You're going to be able to define the momentum and make sure that rule number 1 is met. And you're going to be able to see the areas that could stop the market, making sure that rule number 2 is met, guys. Inside of 1 bar, 2/3 of your rules are met. Inside 1 chart, 1 bar, you're going to get that core, that base, that solid platform that's going to help you see the rest of the entries. Once the rules are true, you go to a small chart. This is your entry chart, guys. You'll also use it for management. This small chart is a very fast chart. It's a refinement chart. And inside of this one bar, you might see 20 to 30 bars. This is the inner workings. It's like an x-ray of all the up and down inside of that bar. We're going to use this to pinpoint the best of the best entry, to identify that point where the market is most likely to continue. And because we're using a smaller chart, smaller bars, refinement process, you will be able to reduce your risk dramatically. You're going to be able to increase your profit potential as well. So I'm going to encourage you guys, once again, let the large chart lead the way. Learn these first two rules, commit them to memory, recognize them instantaneously. And when you can do that, and it'll take you 3 or 4 days to do it, maybe, you're going to see all the entries, not just the high probability trade entry. Trading is about being not in control. It's a weird concept. You'll never have any influence over the market. Your 2 contracts, your 10 contracts will do nothing to make a market go up or down. The market doesn't care about your rent. It doesn't care about your mortgage, your car payment. It doesn't care that your kid wants to go to college, guys. The market has a memory and the market does what it does. There are men and women, the large crowd, they create the trends. These people have billions behind them. They make it go up. They make it go down. They create the momentum. They react at areas. So when you're looking at your 2 charts, remember that trading with the large chart, following the large chart, going with the flow, this is the easiest way to find success. Your small chart, I want you to think of it as the people that don't have the patience or the desire to go with the large crowd. They fight. They create what we call a retracement, just a little push down when everything says up, or just a little push up when everything says down. Guys, these fighters have the money to make that little fluctuation happen, but their fight typically ends 70 to 80% of the time. They don't change the trend more often than they do. And guys, rule number 3 is designed to have you pinpointing where their fight is most likely to fail, where the market is most likely to bounce and continue with everything that the large crowd wants. So when we talk about 2 charts and we're talking about the highest advantage that we could possibly have, it's important that you remember you're not in charge. We're going to bring up Norbert real quick, guys. Sharks are the big money investors. Sharks are the men and women that create trends, establish momentum. These are the people that we don't want to fight. I like the idea and the metaphor. Be a remora. Let this guy get 2/3 of the good stuff for you and then just capitalize on all his hard work. And when you do that, what happens is life becomes easy and trading doesn't have to be stressful. And you no longer have to rely on hope for entries, for exits. You're simply just following a plan. Give him a hamburger, right on, Gary. You're just following a plan. You're following a pattern, guys, and that's what we do. So, and that's what we're going to do for the first hour. My first hour every day. Repetition creates recognition. I say the same thing over and over, guys. I repeat the same words, the same looks, the same rules, the same reasoning. So our first hour, we're going to learn the Fibonacci rules and the trigger line rules for when it's okay to trade. It's okay to trade when my rules are met. How easy is that? When my rules are met, I'll enter the market because my rules describe a pattern. My rules describe 3 rules, or the rules are 3 things that happen to create a pattern. The pattern has been proven to win more than it loses. So my goal is rule adherence, guys. If my rules are met, I won't hesitate to enter. If my rules are not met, I'm going to embrace that idea that 90% of the day it's okay to do nothing. Everyone in the room, whether you're day 1 or day 1000, you have the ability to simulate, to practice your plan, to learn these looks, to get into the market, out of the market. Learn the mechanics of Ninja Trader, guys. Simulate your trades. Practice entering, exiting, managing. And then the first step in becoming a confident trader, ASAP, is post your trades in the room. Guys, when you take a trade, you have the ability to get feedback on everything that you do. So post a trade in the room, and even more importantly, tell me why you did what you did. Talk about the momentum on your chart. Point out whether or not you had a clear path. Define your entry and why you did it. Even exits, guys. And you're going to go back and study these trades. So the better you annotate your charts, the better study tools you're providing yourself. And what's going to happen, guys, is the more you post in the room, the more you're going to realize the patterns that are bringing you success, the ones that are taking that success. I'm going to give you feedback on everything that you do, about your chart read, about your entry, about your exit. I'm not going to judge you. I'm not going to grade you. I'm not going to be the trade police. We're simply going to break down everything you drop in this room in terms of advantages, making sure that you have an edge when you choose to enter the market. So take advantage of that. It's like a private session with me every time you post. And then we will simplify. My life revolves around simplicity, guys. I'm a minimalist kind of guy. We're going to keep it 3 rules on 2 charts. I'm going to hand you a plan with those rules, with a checklist to enter, and a way to manage it. And the plan is designed to optimize your chances of success with this software as you learn to read it. Your job is going to be to know what looks you're going to commit to. It's just a pattern. The look doesn't change. It's just a pattern. And you have to learn those Fibonacci, those trigger looks, so that they become easy. And just like everything in life, guys, things get easy when you do it repeatedly. Repetition creates recognition. And that's where the second half of becoming a confident trader, ASAP, comes in. I'm going to give you the spreadsheet. I give it out every day. Guys, I've already added 2 or 3 things to it today. This spreadsheet has 4 tabs. I think they're all important. The first tab is what it looks like to have your rules met individually in the green section. So we talk about having strong triggers. There's 50 pictures plus of what it means to have strong triggers, what it looks like, visually what you're looking at, and then verbally what it means to you to have it. And if the goal is rule adherence, guys, we've also got a picture of weak triggers. What does it look like when I shouldn't be entering the market, when my edge is gone, when I don't have that advantage? Same thing with clear path termination. And then when you have 2 greens, guys, go to the third, find your entry, because you have those core advantages. I'm going to give you a sheet that's going to help you fill this out on your own so that you can study, so that you can create this recognition. The client trades tab is where I steal stuff from you guys. I'm not proud of it, but I do. These are high probability trend trades. These are medium probability trend trades. These are annotated charts showing Nexgen users finding success with momentum, with path, with entry. Go through, use it as a study guide. There are clients' perfect trades. That's what these are. There's the entry sequence, how to define where the market is most likely to continue for both long and short, breaking it down individually, getting you in at the best of the best spot. There's ideas on management. One of the things I did this morning is I posted some patterns in the room. Guys, patterns repeat themselves all the time. Patterns happen each and every day. And this was happening, so I did it. And this is where the market was. And I said, if price accelerates away from these triggers, guys, hits a midband, hits a fib, it's more likely to close the gap back to the triggers. This is what we call the gap theory. And because I understand that pattern, I put this one up. It's like having a crystal ball. I didn't know that it was going to go up there, but I knew that because of the pattern, it was more likely to go up there. And pattern recognition gave me the ability to understand that when it's not coming from a good top and it comes back here, they're going to come up this way and decisions are going to be made. And sure enough, I think my last picture is, there it is, closing the gap. So when this bar was halfway there, I knew that the likelihood was for it to go up there. And guys, it is like having a crystal ball. It's pretty outstanding. The market has a memory. The market does the same thing. When you learn to identify what the market is telling you, guys, this is the S&P this morning. This is crude oil in 2021. That's a pattern. That's a fight that repeats itself. So remember that you don't have to chase the money. Learn the patterns, follow the patterns, respect the patterns, and try to adhere to the patterns. As you begin to recognize them, as you begin to work on your plan, there's a whole section dedicated for your pictures. And then there's the trade tracking sheet, guys. And this trade tracking sheet is where you're going to post your pictures. And your pictures are going to be annotated. So every morning, you should go back and take a look at those pictures. What did I do? What brought me success? What took that success from me? What worked? What didn't work? Excuse me. Your annotations are going to tell you what you thought. Um, and then there's the section for feedback. And this is where you're just going to hear what I think. So yesterday we had a picture that was a momentum trade that failed. And it was labeled momentum trade, and it looked almost like a momentum trade. And the feedback was that it didn't actually have momentum, that it didn't have those strong triggers. So it couldn't be a momentum trade. And in the moment, you see it and you believe it. And then when you step back and read your annotations, you're like, all right, I need to wait for that better look. And that's what the feedback's going to tell you. And what's going to happen is you're going to begin to see the same thing over and over. Maybe you keep trying to take momentum trades without momentum. Maybe you're like me and you kept trading in determination conditions, hoping that they would break. What happens is you're going to start to see the patterns in yourself. And that's one of the things that I'm good at. If you give me 4 or 5 pictures, 5 or 6 pictures, guys, I'm going to start to see what your thing is, whether it's trading in determination conditions, whether it's jumping in late because you're scared of the right entry, whether it's jumping out early, not trusting the advantages. We're going to see it. We're going to talk about it every time you post in the room. You're going to be able to take that feedback and incorporate it into creating your perfect plan. So that's the path. Post in the room, use your spreadsheet. Guys, we're going to learn the rules because rules describe a pattern. And this pattern has been proven, and you'll be able to prove that it wins more than it loses. If you're new in the room, you see a lot of people posting these pictures, and you're like, how come he's ignoring them? I'm not. The second half of class, guys, that's where we take the rules, the foundation that we've built, and we apply them to the feedback on the charts. What going over the rules first does is it gives you an understanding of what I'm talking about when we start looking at Better Dad's charts or Cav's charts. So rule number 1, large chart, big chart, slow chart, large crowd, however you want to say it. They have to create strong trigger lines for you because we're looking for that advantage of momentum. In order to have strong trigger lines on the large chart, you have to be trading with the trend and this little safeguard. So if the background's green, the trend is up. If the background is red, the trend is down. Your highest chance of success, because it's the only way you can have the rules met, is to look for your rules to be met to trade with the trend. So in an uptrend, small and large triggers have to be green. The colors have to match across the board. If they don't, you don't have strong triggers. And the background is red. Small and large have to be red. And if you don't have strong triggers. So a little safeguard there. What it means to have strong triggers. It's the same up or down. It means that your small triggers have broken away from the large triggers, that they are wide and angled in the direction of the trend. But the thing that you're looking for to define that strength is the separation between the small and large. And I like to draw this picture because I think the visual helps. Strong triggers means that these scissors are open. And that's exactly what it looks like, guys. 2 blades, and as Jerry says, they're able to cut you a check when you have the open scissors because separation is strength, guys, and strong triggers rely on that separation. But when you have it, the odds are favorable for the market to continue up. The odds are favorable for the market to continue down. So what you're going to hear in this room all day long, odds favorable momentum, OFM. And all it is it's a separation between the small and large. When the separation goes away, when the smalls return to the large, we call this weakness. It's the opposite of strong. Strong, and now we have weak. Odds are favorable for the market to continue down. Anything can happen up or down. And I want you to believe that. When you have weakness, anything can happen up or down. When the large trigger moves over the small trigger, is that a weaker trend? Help me out here. Are you, I don't, let's do this, Jared. This is a good question. Instead of saying strong or weak trend, because there is a look for a strong trending market, but that means that the market has been railing in the direction of the trend for like 30, 40 bars. Let's do this instead. Like at the bottom in the red, It's not even that it's a weaker trend, but what you're going to associate, Jared, when those scissors close, when the smalls work in, you don't have the momentum that you're looking for. So right here, you have a bullet train and it is headed across country and it is absolutely flying. And you know that the market is screaming down because of the separation. But as they let off the accelerator, as the momentum begins to die, maybe you're going uphill, you'll notice that the small triggers return in. So it's not that the trend is weak, but the momentum in the trend has gone away. That driving force has begun to dissipate. Does that make sense? So we're not defining the strength of the trend, but rather the strength of the move within the trend. Good question. I don't think I've ever been asked that before. So here I have strength and the market is more likely to push down. Here I have weakness. The market is more likely to retrace from nowhere. It's more likely to react to those key things. Oh, no worries, Jared. When you guys post these questions, I can't stress it enough. It forces me to rethink and it forces me to say it differently. And everybody hears things differently, right? So that's perfect. Strength versus weakness. You're going to see that strength isn't a forever thing. Strength in a move, it's the same look every time. It's that separation. And then weakness is always when those triggers come back together. So weakness, and there's a reversal. And weakness, and there's a reversal. And weakness, there's a reversal. Uh-oh, strength, and there's a reversal. We're going to talk about rule number 2. And then there's weakness again, and there's a reversal. So my hope for you guys as a brand new user is I want you to be hell-bent on committing to that separation of the triggers. Give yourself that advantage. Focus on having the best of the best, because this is when the odds are favorable for the market to continue in the direction of the trend. And be willing to sit on your hands when that momentum goes away, when that driving force isn't behind it, because this is where the market can do anything at all, and rule number 1 isn't met. Does that make sense, guys? That's rule number 1, strong triggers. That is the fewest amount of pictures you will ever have to define strength. And if you look at the live market, you're going to see that strength, and even more so, you're going to see that weakness right where the market reverses. Strength pushes you through areas. Weakness can't seem to break it. And guys, you're going to see this all day long. You're going to see that fluctuation between strength and weakness. Committing to momentum, committing to that advantage, it's so hard to stop. It pushes the market, it breaks areas, covers mistakes. Once you have it, we got to make sure there's nothing in the way. We've got to make sure there's not a brick wall in front of that bullet train. So termination conditions false. No areas on the large chart, guys, that can stop the market. We want to make sure that there's room to the profit targets. We're going to call that a clear path. So a termination condition, all it is, it's a Fibonacci-based indicator, guys. It can reverse the market. It can stop the market. I've tried to simplify that a little bit. This is from the user guide giving you the lineup. It's a horizontal line on a large chart. More than anything, it's a horizontal line on a large chart. It's a divergence high. It's resistance. It's support. It's one-to-ones. Guys, all of these areas, I want you to think of them as where the large crowd is most likely to make decisions, where the men and women that create trends, establish momentum. This is where the buyers are most likely to buy. This is where the sellers are most likely to sell. This is where profits are most likely to be taken, guys. So decisions are made at key areas. That's the magic phrase. And we're going to use that concept to identify termination conditions to make sure that you're not trading into an area that could stop the market. It looks like this. If decisions are made at key areas, the first step in identifying a termination condition is allowing the market to get to the decision-making point. Price reaches an area is the way we're going to say that. So your price bars are going to come up and they're going to reach Fibonacci resistance. They're going to go down and they're going to reach Fibonacci support. Once price reaches the area, we are done with price. We don't need the price bars anymore. They are not going to tell the story. Your trigger lines are going to give you everything that you need to know about that area. So if price reaches resistance, I want you to ask yourself, where are my triggers? And if they are below Fibonacci resistance. Fibonacci resistance is a termination condition. If price reaches support, where are my triggers? My triggers remain above support. Support is a termination condition. And what you're going to find is that termination conditions, every line on your large chart, at least for a fraction of a second, will be a termination condition. This is a good example here. Right there, the price bars reached resistance and the triggers were still below. This tells me absolutely no trades into that area, even though it broke. Absolutely no trades into that area, because more often than not, that area is likely to create a big ugly bounce that's going to pull me out of a long position, that is going to create a fight between the buyers and sellers that I don't want to be a part of. Or it could break the way it did here. Everything gets above it, and the reality is you're never going to know what the reaction is. So keep it simple. If price reaches an area, ask yourself, where are the triggers? If they haven't broken through the area very much, like price reached yellow 1-to-1s, the triggers haven't broken, absolutely no trades into that area, guys. It's a termination condition. It could stop the market. Price reached support, the triggers didn't break, absolutely no short trades. That's where the reversal came from. Price reached resistance, absolutely no triggers break resistance. That's where the reversal came from, guys. So rule number 2 was put into play not because of the one time that it breaks or the hope that it breaks or the wish that it breaks. It has been proven that when price reaches an area and the triggers don't break it, it is more likely to stop the market than it is to just arbitrarily break, which means your edge is gone, your advantage is gone. And rule number 2 is designed to keep you from trading into the areas that could stop your trade. Areas break. We saw it right here. Areas break. Typically with momentum. But an area is not considered broken until both the small triggers and the large triggers get through the area. So price reaches it over here. It's a termination condition. It is not a clear path. It's not a broken area until almost 12 bars later, when both the small triggers and the large triggers get above resistance. Resistance begins to behave as support. This is what it looks like when an area breaks. We call this a breakout of Fibonacci. And once it breaks out, guys, if you have momentum, you're going to look for opportunities. And you're hoping that that breakout takes you to the next key area. You can also get a clear path from a reversal. Price reaches Fibonacci resistance, guys. You have to wait for the reaction. Is it going to break or is it going to hold? Well, if it doesn't break, it means that it held. And it means that your large triggers are going to roll and your small triggers are going to turn. And guys, as long as you're not hitting one of those horizontal lines, you have a clear path from the reversal. And that path remains clear until you reach the next area. So to identify it, and if you go to the market and you look at it, let me find a good example without a ton of stacked fibs. Let me do this real quick. Let me take half the fibs off. Once the small triggers and the large triggers get above resistance, resistance behaves as support, the path is clear until you reach the next area, or those weak triggers create a reversal. Once the reversal happens, there's odds favorable momentum, and guys, you have room before price reaches Fibonacci support. You have a clear path to trade to support. Once you get to support, you have to believe that decisions might be made. So you'll go through this all day long. You'll say to yourself, man, I can't trade into this divergence low. I need it to break. And sure enough, eventually the small and large get below. Does that make sense, everybody? For the brand new user, it's either a termination condition, absolutely no trades into the area, wait for the reaction, or it's a clear path. And if you have momentum, let's go look for an entry. What you're going to find, and I can't stress this enough, is that when you allow momentum and path to lead the way, guys, the easiest trade that you are ever going to take, the highest probability trades, the most likely to succeed trades, come with having the advantage of momentum and couple it with a clear path. And when you have that, you're going to see these tails on a large chart. Guys, these tails, we don't trade the tails. These are the pullback on the smaller, faster chart. You're actually going to use an entry chart to define where these tails are most likely to form when the rules are met, trading away from Fibonacci, trading to and taking profits at Fibonacci. Guys, this is where the success comes for new traders. So rule number 2, it's a safeguard, it's a safety net, it's a giant waving red flag that says don't trade into resistance, you're most likely to lose. Don't trade into support. You're more likely to lose than win. The same is true here and here. And rule number 2 can keep you out of consolidation. And rule number 2 can keep you out of chop. And if you insist on having both rules 1 and 2 met, guys, there's absolutely no losers in this range. But look how it's defined where the market needs to break out of. Look how it's defined where you need to find your advantages. Because once it breaks out, once you get momentum, once that path is clear, guess what? You're going to be able to pinpoint an entry and look to ride that momentum up to the next key Fibonacci area. And that's all we're talking about today, guys, is recognizing those 2 advantages so that you can turn them into an entry. Is everybody good with that? Can you give me a why if you're comfortable with that? Price reaches an area, triggers don't break, it's cool to sit on your hands and do nothing. Once the small and large get below the area, guys, look for the entry. Look for the entry. The easiest trades come from below a fib going to the next fib and vice versa. There is one termination condition. There is one termination condition that you're going to see on a small chart. And guys, it's 3 divergences. Divergence is a loss of momentum. That's all it is. So if you see it 3 times on a small chart, 1 divergence, 2 divergence, 3 divergence, 3 cyan lines, in the same price range. And people always ask, Mark, well, what's the same price range? Guys, I want you to use the same idea. If the small and large don't get below this divergence line, it stays in play. If the small and large get below it, well, it's broken. We're going to restart the count. 3 losses of momentum is going to show you change that you can't see over here on the large chart. Because what it's saying is the sellers are in control, and this is the first indication that the buyers are fighting them. And the sellers try to take control again, and the buyers fight them a second time, and then the sellers try for a third time, and the buyers say, no, we're going to keep stealing your momentum, and we're more likely to create a push up. 3 divergences in the same price range helps you see that happening when your large chart still looks like it has momentum and room to run. So that's the only time I won't look for an entry if my rules are met on the large chart. But if they are, guys, if my large chart has momentum, if my large chart has a clear path, I'm going to use a little precision. I'm going to use a limit order to buy or sell a pullback at an area inside of triggers, guys. And what we're doing with our entry rules is we are literally pinpointing where this small crowd is most likely to fail. We're going to buy this pullback, this down, when all of this says up and strong. We're going to pinpoint it right at an area, right inside of triggers. And guys, this is what's going to help you reduce risk. This is what's going to help you create more profits. And it's very specific. It's very precise, and it's very calculated. So when the large chart says down, and the large chart has odds favorable momentum, and the large chart has a clear path, am I stressing it hard enough that the large chart rules should be met? I hope so. Guys, this is how you're going to define your entry. You're going to wait for the small crowd to fight with a reversal bar. That's that fight. That's that up bar when everything says down. And it's counterintuitive, so you want to go study this a little bit. At the time of that reversal bar, you're going to know where that retracement's most likely to go by using your trigger lines, large and synthetic. So these large triggers, the smooth triggers on your 5-1, you're using those for momentum. These are native to the 5-1. These large triggers kind of have steps on them. That's just the large triggers from the large chart. Price typically returns to large triggers, so you can define the retracement zone from the bottom to the top. But failure typically happens, bounces typically happen at areas in that retracement zone. And this is how you're going to pinpoint entries. Have an amazing day. I'll see you tonight. And all of this, the retracement, The reversal bar, the retracement, the bounce, the continuation, all of this happens in that one bar. And you're literally pinpointing where that tail is most likely to form. So when you have momentum on the large chart, when you have a clear path on the large chart, minimize it. You're done with it. Go to your small chart. And on your small chart, you're going to patiently wait for a reversal bar, that up bar, after all of these down bars. When the reversal bar prints, I want you to take a second and define where the retracement is most likely to go. Somewhere from the bottom of the large to the top of the large. This is your retracement zone. This is where that push up is most likely to happen. Trades don't come from triggers. Trades come from areas inside of triggers, inside of that retracement zone. And in this case, you've got a mid-band. We're looking for mid-bands, fibs, and yellow 1-to-1s inside of triggers. Guys, this is the easiest entry you're ever going to find. You have one option. You're going to activate a limit order 2 ticks below it. And some people say, well, if it could retrace all the way up here, why don't I put my order up here? Because triggers aren't bouncy. This area is most likely to create the bounce. This area is where the small crowd's most likely to fail. Goal reached, time to sim trade. Who reaches their goals before 10 a.m. Eastern, Cav? You must be following rules. Nice job. Guys, you're going to activate a limit order, and if they come and get you, you're in that trade. And you're in the trade from the best of the best spot. Because trigger lines define the retracement, guys, anything beyond that retracement zone, anything above those triggers in a short trade, this is where your advantage is no longer in play. This is where your edge is no longer in play. Once you get beyond these trigger lines, once you get past the areas most likely to create a bounce, the advantage of rule number 3 is no longer on the table. You no longer have an edge. You no longer have a high probability scenario. And you don't know if, when, or where that market's going to continue down. So any lines outside of the triggers, these are not a part of your little window where the market's likely to fail, guys. This is where the market should not go. So by defining where the market's most likely to continue, you have defined where the market should not go. In a long trade, when the market is up, when the trend is strong, when the path is clear, it is going to be screaming north, and you're going to be like, oh my gosh, what am I going to do? What am I going to do? How am I going to make money? Guys, you're going to wait for the reversal bar. Why? Because the reversal bar signals the fight. This is a pattern. All it is a pattern, guys. It repeats itself. This reversal bar says, hey, you know what? The fight is on. Where's the fight most likely to go? Somewhere from the top to the bottom of the large triggers. But it's most likely to bounce from an area in that retracement zone. Fibs, midbands, yellow 1-to-1s. In this picture, we have two areas. We have the midband, and we have the yellow 1-to-1. So it creates a little bit of a window, kind of a range where the market may bounce. And we're going to call it the window of opportunity because this is where the small crowd is most likely to fail. This is where the market is most likely to bounce and continue in the direction of the trend. And here's the thing. The pink arrow shows you where the retracement is most likely to occur. The white arrow shows you where the market is most likely to bounce and continue in the direction of the trend. And I don't know if it's going to be the high level or the low level, but remember that my large chart has odds favorable momentum, strong triggers, and it's really pushing north. And my large chart has a clear path. There's nothing in the way to create a bounce. So my limit order always goes just above the highest point, the one closest to the reversal bar. We're not going to trip over a couple pennies trying to save a few dollars, guys. This is your entry for the high probability trend trade long. Reversal bar, retracement zone, area most likely to create a bounce. Anything below the triggers, below the retracement zone. This is where the advantage is gone, where rule number 3 is no longer met. This is no longer a high probability trend trade if you enter below the triggers. This is the wrong side of the triggers. You're going to learn to ignore these lines on the wrong side of the triggers. But again, that lesson, by defining where the market is most likely to continue, guys, this is what creates a manageable trade. By defining where that market is most likely to bounce and continue short, you have defined where the market should not go. And where the market should not go is where your initial stop is going to be placed. It's on the plan I'm going to give you. Initial stops are going to be placed 4 to 5 ticks above these trigger lines. And I'm going to tell you, there will be instances where your stop gets hit. I've never, ever in my life met a trader that doesn't take losses. The idea is that you take acceptable losses. Because if you have strong triggers, if you have a clear path, if you have an entry inside of those triggers, what you've done is you've described a pattern that typically wins up to 70 to 80% of the time, which means 20 to 30% of the time, they're going to get you. But because of your precision through rule number 3, you're going to take smaller losses. You're not going to put stops $1,000 off in the distance hoping the market goes up. You're going to take your loss, you're going to dust off, and you're going to say, all right, let's wait for the next set of advantages to come through. Your rules and the recognition of the pattern, the trust in the pattern, pulls a lot of the emotion out of trading. So we've got to piece the 3 things together. This is what it looks like. This is how you're going to be able to study it. I've been telling traders for as long as I can remember, the best traders, the best chart readers, the most accurate people, the people with the most confidence, it doesn't come from taking a bunch of trades and hoping to get lucky, right? You don't improve your golf game by going out and playing bad golf. You improve your golf game by working on the mechanics, by going to the driving range, by doing it in a safe environment. This is how you could recognize the pattern, go through the rules, write them down without ever having to take a trade, guys. When the large chart rules are met, when you have momentum, when the path is clear, circle any tails that you see. These have already happened. The push has already been there. This is all historical. But if that circle lines up with an area inside of favorable large triggers, guys, that's your pattern. That's the high probability trend trade. So you can go back on a large chart. Let's get to the current market and see what we have in terms of rules met. We may have to go back a little bit. I'm just going to circle this one with the potential to break. And I'm going to open up a small chart. And that's not my small chart. Where did that go? And I'm going to go find it on my small chart. And it's right back to resistance, but it's on the wrong side of the triggers. Dag nabbit, that might not be my trade. But you can go up and you can look at these things. And sometimes, even when the rules aren't met, these patterns are going to present themselves. So you've got to really adhere to having the rules met, giving yourself the highest chance of success. Let's see what that one looked like, just for giggles. Again, wrong side of the triggers. Maybe not my trade. And I took my synthetics off, so that was actually directly into a termination condition, which is probably where that bounce came from. And then does everybody see? I'm not taking a trade, but price reached yellow 1-to-1s. None of the triggers broke through. And look what's happening on the small chart. 3 divergences in the same price range. There's that pattern. Let's see if the S&P is being a little more forgiving. Whoa, that's a big move down, isn't it? Have we had any high probability trend trades today, guys? Here's one in the middle of the night. That area had the potential to break because of momentum. Here's one that looks like all the rules met. Odds favorable, momentum, price didn't reach the next area. Let's go to that one. And it cleared the previous area. So let's open up a small chart. Are you guys with me on what I'm doing here? Sometimes I feel like I'm talking to myself when I look for examples. I could have a million pictures, but I want you guys to see that it happens real time. Odds favorable momentum. So Jared and Aaron and you guys that are still kind of new in here, do you see the strong triggers? And this has already happened. This is all historical. Price didn't reach the divergence high. All my triggers cleared the previous area. Guys, this is your look. This is the money look. And when it pulls back to support right in that retracement zone, there's your opportunity to take it up to resistance. Better Dad, you took this one yesterday. So this is your study tool, guys. This is all you're doing. This isn't a trade that you take. This isn't money that you make or lose. This is you saying, this is my pattern. So if you take this picture type out strong triggers, smalls above large, wide, all green, whatever you need to do. Odds favorable, momentum. Rule 1 met. Why am I doing that annotation? Because I want this look. I want my brain to think this. I want my brain to say, oh my gosh, this is the best of the best. And I want to do this. And I'm going to say, price didn't reach an area. Cleared previous area. No term. Rule 2 met. Clear path. And guys, I want to really ingrain in my brain that this is it. This is the look. So every time I see this, my brain starts screaming, holy shit, Mark, your advantages are there. Your edge is present. Go find an entry. And what happens is for my entry, I want to write out as well. Bought a pullback at an area, and this I go all caps, inside of triggers. Easy money. This is my look. So now what you've done is you've taken a market that's not moving. There's no pressure of wins or losses. You've identified the advantages on the large chart that have you look for an entry, and you have talked through exactly what it takes to find your entry, where it comes from. You'll notice that the circle on the tail lines up with the area for entry. That's your trade. Go to your spreadsheet, build your plan, drop it in there. Call it perfect, because that is perfect. And guys, the easiest money you will ever make is with momentum and path, trading away from a fib to a fib. That's it. Does that make sense? That's all we've talked about for a whole hour, guys. How do you get good at it? I'm glad you asked. Pictures. Pictures, 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 pictures. Guys, I can't stress that enough. If you really want to get to the goal fast, take pictures. Let's make this so our old eyes can see it. So this is Chart Reading 101. Chart Reading 101, guys. This little exercise is designed to get you focused on the large chart first, to recognize those advantages first, to get you in a position where you're always focused on strong triggers and a clear path, because this is where the most winners typically come from. So do exactly what we just did, guys. Go take 25 pictures of strong triggers. Take 25 pictures of weak triggers. No worries, David. Wear your seatbelt. Take 25 pictures of a clear path. Take 25 pictures of a termination. And do it the way we did it here. Draw an arrow to those strong triggers. Talk about it on the chart. This is exactly what I'm looking for. Talk about why that's a clear path. Talk about why that's an entry. And guys, what happens is you're creating this connection between what your eyes see and what it means to you in terms of advantages. You should start talking out loud. These are my advantages. And if you do that and you go to that spreadsheet and you start filling this thing up, 25 pictures of each, it's difficult to make the mistake of trading without strength. You may choose to trade without strength, but it won't be because you didn't know what strength was. So go through this chart reading exercise. It'll take you 3 or 4 hours. Spread it out over the week if you need to, guys. This is a marathon, not a sprint. To make it easier, I'm going to give you the high probability trend trade checklist as well. This checklist, ladies and gentlemen, is the absolute, positively best of the best, highest probability way you could ever take a trend trade. And the first part on the checklist, the first check, is not one of the rules. The first one says, hey, is the market coming from a strong top or bottom? You're going to hear that a lot, strong top or bottom. So a strong top or bottom means that the market created a termination condition, price reached an area, none of the triggers broke, and that termination condition reversed the market. It made those large triggers go from green to red from a high, or from red to green from a low. A strong top or bottom means that the decisions made by the men and women who control the market at these key areas was so impactful that the buyers lost everything they had going for them, and the sellers took over and shoved it the other way to give you your rules met. Your highest probability trend trade comes from a strong top or bottom. Strong top or bottom is also rule number one for pretty much any other trade you take beyond the high probability trend trade. Your checklist will ask about momentum. Is it present or is it weakness? Only one of them gets you looking for rule number two. Treat it like a flow chart. It asks about are there termination conditions? And guys, this kind of shows the whole life cycle. When price reaches support and the triggers are still above, that's a termination condition. I told you every line is going to be a termination condition, even if it's a fraction of a second. So initially, this says absolutely no trades. Wait for the reaction. Is it going to bounce? Are they going to fight? Is it going to reverse? Hell, I don't know. I'll never know. If you are in a position, that's where the market's likely to go with all that momentum. That's a great place to get paid and then wait for the next trade. The rules say wait for the clear path. Force the small and large to get below support. Force it to reverse and go the other way. And now you have a clear path until the next area is reached. That's rule number two being met. This number two with the pause button, this is where you're headed, guys. This is one of the doors that gets opened when you understand the difference between a termination condition and a clear path. This is what we call a 50-50 look, and this is the second trade on the plan that I'm going to give you. And this 50-50 look is aptly named because 50% of your triggers have broken through the area in question, 50% are lollygagging above it still. So it's not a clear path. But as long as I have momentum, strong triggers, it has the potential to break. You're going to get a set of rules and another checklist that's going to have you capitalizing on what we call a medium probability trend trade, trading that potential to break. But because it's not a clear path yet, you're just going to manage it a little more assertively than you would if you had odds favorable momentum and a clear path. So that's the terminations, and then just defining your entry. Defining where the market is most likely to bounce, defining where the small crowd is most likely to fail. All that's on that checklist, guys. That's going to help you go take the pictures that you need to take. And then the second page is a printable version. If you print this out, you put it on your desktop, this is going to do two things for you. One, when you're looking for the trade, it's going to remind you what you're looking for. And then after you've taken the trade, if you will annotate your charts using the verbiage, was the market coming from a strong top or bottom? Even though it's not a rule, you don't have to have it. Get in the habit of identifying it. It's going to pay dividends later. Did I have momentum? Guys, right. Strong triggers, yes or no? No matter what the answer is. Same with termination. And then when you define your entries, guys, as a brand new user, if you really latch on to writing inside of triggers, inside of favorable triggers, what happens is you know where you're looking to get in, and you start avoiding those losses from the wrong side of triggers because the words tell you where to look. So write these on your chart. Tell me how you saw them, and make sure you're posting them in the room. You can also use this checklist, and I don't talk about this a lot, but I'm going to do it right now. When you go back and do market replay, it has a pause button. So you can trade the market as though it were live, and then when you think you have a trade set up, hit the pause button and go to your checklist. And what happens is if you go through this, maybe after market, maybe on a Saturday, have a glass of wine, cold beer, whatever makes you happy, what's going to happen is you're going to see the potential of following rules. You're going to see the potential of following a plan. And when you do that, guys, it becomes more difficult for you to deviate from the plan because you're creating confidence. So you're going to get that as well. Nobody's ever been able to follow this truthfully and do worse than 70%, which is why that checklist is the core of the KISS plan. And this is your trading plan until you're capable of writing your own. This is the plan. It's a stepping stone. This is your first trade, not your only trade. And Ron, I owe him a nickel. This is not your get-rich trade for most people. This plan is not your get-rich plan. This is the plan that teaches you to read your indicators so that you can create your best plan, the plan that suits your needs, that embraces what you see, what you feel, what you do. So this is just a stepping stone, but this plan is designed to optimize your chances of success with the high probability trend trade as a new user as you learn to read your indicators. I have had men and women get funded in prop firms in their first 30 days with Nexgen with zero trading experience by learning how to enter the market through those three rules and then using this plan for management as well. So through simulation, study, class feedback, continuous practice, guys, you'll be empowered to craft a plan tailored to your personal goals based on your ability reading the indicators. So that's AI telling you, guys, when you can read and recognize advantages, you're going to see a lot more advantages. And you probably will deviate from this plan, change it up, make it yours. I hope so. But there's two things you have to know before you're not on that simulator. And guys, this is such an important concept. Simulator is the safe zone. It's the safety net. It's where you can't get hurt, where you can't lose money, where you can't upset your spouse. When it's time to go live, when it's time to test that plan, guys, these are the two things that you need to know. This is what we call a trading plan. You have to know why you will enter a trade. And the cheesy answer, but the true answer, is because my rules are met. Because my rules describe a pattern, and the pattern has been proven to win more than it loses. And when you go back, guys, and you verify that the pattern is true, when you do this study and you prove to yourself, Jared, I'm almost to 30. I get it. There's something about you she likes, though. She's keeping you around. Guys, if you go through the process of looking at this pattern, of seeing that it works, of recognizing that it doesn't go where the market shouldn't go, if you put the time in to believe this pattern, what you're going to realize through your study is that it does win more than it loses. But you're also going to realize that it does occasionally lose. And it's not your desire to win that fuels winners, guys. It's your adherence to the plan. It's your commitment to the process, the flawless execution of the method. And because you know this pattern both wins and loses, you realize that you never know what the outcome is going to be. And that removes a lot of emotion, guys. It absolves you from having to have a crystal ball. All you have to do is follow the pattern. But then you have to know why you're going to exit. And I fell short horribly as a brand new trader because I would get into the market and I was so terrified of not winning because I didn't trust the pattern, that I would exit too soon. I was the king of taking the perfect entry and making 2 or 3 ticks on it. At the end of the day, I was down commissions. So why will I exit? Guys, exits are taken either at predetermined targets, whether it's a fib that may hold, whether it's a dollar amount, or when the advantages that have you enter the trade have gone away. This is why we talk so heavily about recognizing advantages. Because if it's momentum, path, and that entry area that gets me into the trade, when one of those goes away, it's okay for me to exit. I no longer have an edge. So if I enter at the area inside of triggers, my edge is gone 4 to 5 ticks beyond. If I enter at the area inside of triggers, my edge is gone if 3 divergences print. And guys, when you define your entry, when you get in at the best of the best spot, when you have all those in play, this is what creates manageable trades. This is what reduces risk. This is what gives you the longest run to your profit targets. And you'll get to a point to where you start finding those bigger profits, those bigger moves, until you can read your indicators, until you're comfortable with what you're seeing, until you stop getting sweaty palms and butterflies every time you hit buy or sell. The management plan in this plan is designed to help you understand stop placement, and it's really focused on getting you paid because it's hard to exit a market that your gut is telling you might go further because you hate the idea of not getting every dollar. Base hits pay bills. One of my favorite phrases. So the KISS plan uses 2 contracts. The first contract is going to be designed to get you paid, to understand stop placement, to get money in the bank and create that confidence. The second contract is designed to start to develop trust in the large chart advantages and how the market is more likely to continue with that trend than it is to just reverse from the middle of nowhere. So this KISS plan is your ground floor. It's very mechanical, it's very if-then, very pragmatic, it's emotionless. Learn how to follow it as a brand new user, and it's going to open the doors for different management plans. You'll create your own when you can read the indicators. But this KISS plan is 2 contracts, and it is 100% dependent on your ability to define your entry, to get in at the area inside of triggers. And then it's 100% if-then. If entry is 2 ticks below resistance, then the initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. And You're going to know your risk before you ever enter the trade. You'll know where the stop goes. You'll know where your entry is going to be. Guys, you're going to know all that as the market's going down and you're waiting for your reversal bar. You have to be okay with risk, guys. Sun Tzu in The Art of War said that in order to be successful in battle, you have to be willing to put yourself in the kill zone. This stop is your kill zone, guys, and it's $150 worth of risk going into this trade. If you try to reduce it by putting your stop anywhere in the retracement zone or by areas, you're likely to get stopped out only to watch it run. We've all done it, and it's painful when it happens. So if I enter at 71.34, then my stop is 71.49. That's $150 per contract. This is $300 risk on the trade. I accept it because of the advantages. My targets are at $100 and $200. They are predefined, and I'm not going to touch them. If they don't stop me out, if I don't take a loser, I'm going to get the reversal bar. The reversal bar, we also call this a confirmation bar when the rules are met, because this first down bar is confirming that the market's going down with the trend, down with the momentum, down with the clear path, and down from the area inside of triggers. If the rules aren't met, it's just a reversal bar down and it has no bearing on anything. Once I get this confirmation bar, I'm going to redefine where the market should not go. I'm going to say every one of my hopes and dreams is coming true. The market's going the right direction. I'm going to reduce risk, and my new stop is 2 ticks above it. And I just went from $150 per contract to $30 per contract. Doesn't guarantee a winner, doesn't mean they won't come get me, but it means that if they do, it's not too terribly painful at $30 a contract. If they don't get me, we're off to our payday, guys. And if price reaches your first target, one of the 2 contracts is automatically removed. That $100 goes into your account. They can't touch it. They can't crack the safe and come in and get it. That's yours. Guys, you're a winner now. You're $100 better for the day. Your palms begin to not sweat so much. And you're like, oh my gosh, there's something to this. That's confidence. And now, with $100 in the bank, you're going to put your stop at break even. You're going to take 100% of the risk off this trade. And you're doing that not because this is where the market shouldn't go, but because you need to develop trust in the large chart. You need to believe that odds favorable momentum in a clear path is more likely to hit that fib or your second target than it is to just reverse and take you out of the trade. And what happens is with that second target only $200 in the distance and absolutely nothing to lose, it's easier to sit on your hands and do nothing. If they make it to the second target, that's a $300 trade. I said base hits pay bills, and I mean it. $300. Most of you can't get on board with only making $300. Guys, that was $300 for the trade. That was $300 in 2 to 3 minutes of your trading day. That wasn't a $300 day. And I'm telling you, a $300 day is not a bad day. If that's the best you do every day, it's $75,000 a year. Make it 400, you're in 6 figures. And here's the one thing that people forget. I'm going to add this in. Your account doesn't know if the $500 for the day was 1 trade or 5 trades. The only thing it knows is that at $500 a day, it's $126,000 a year. So when you hear us say in this room, base hits pay bills, there's a gentleman in this room that has developed a plan based around momentum and path. And he takes just over $100 a trade. That's it, just over $100 a trade. He doesn't hold for the big move. He doesn't look for the home runs because base hit pays bills. If you're new in this room, if you've never seen the movie Moneyball, go watch it. Brad Pitt, Jonah Hill, and the whole premise is that base hits can win a pennant. So small, consistent, every day, guys. It's the everyday profits that reach the goals. And that's it. That's our first hour. It's the same hour every day. You guys hear the same thing from me every day. I'm not going to change it. Nexgen hasn't changed it in over 20 years. And we talk about this first rule, this first trade, because this is the one, guys. This is the foundation, momentum and path. Find your first entry, you'll find the rest of the entries. So we've learned the rules for when it's okay to trade. You have that now. You have them individually. We've broken them down. You have a way to study them. You have a place to put your study materials. It's going to be up to you to do the study. You have the ability to simulate, to practice, to post in the room, to ask questions through pictures, to show me the trades that you take. And guys, the only way you won't get feedback or help from me is if I don't know that you need it. So you've got to find the courage to post in the room. And I know it is terrifying to post losers in this room. Losers are where the good stuff happens. That's where we get smarter. You now have a plan that's been proven to win more than it loses. It keeps you focused on the simple and then takes you to the next trade. The only thing that I haven't given you so far is the experience to take the trades, the experience to recognize the looks, the experience to confidently look at your chart and say, hey, I have momentum, or to look at your chart and say, holy crap, it's weakness. And that comes through the repetition, guys. That comes through the idea that the more times you see something, the easier it becomes. So do the study, post the pictures, ask the questions, guys. And then John posted it yesterday at the end of the classroom. The people that post the most win the most. And I believe that's true 100%. And the people that post in the room, the people that ask for help, the people that get the feedback, the people that correct the mistakes they're making, those are the people that are finding success, the people that are capable of doing nothing. So when we get into the second hours, you're going to see me clicking on a lot of charts with a lot of different trades. And not all of them are going to be high probability trend trades. But what I'm going to do is every chart posted, I'm going to go back to those three concepts. I'm going to go back to momentum. Whether you had it or not, we will talk about it. We're going to talk about path, whether it was clear or not. We're going to talk about it. This is an education room. And we're going to talk about entries, guys. And sometimes I'm going to say that was the greatest trade ever. Don't ever miss that trade. Everything was met. Every advantage was there. Sometimes I'm going to say, Pete, you yahoo, you traded into a termination condition. And everyone in the room is going to go, oh yeah, that is a termination condition. But then I'm going to go through and I'm going to do Pete's chart read and why he made that exception. Because he's been with us a long time. He's an exceptional chart reader. And he's changed his plan. And his plan doesn't necessarily mean that every trade needs momentum, clear path, and entry. He's got the ability, the chart reading, to manage assertively when things aren't perfect. But because he understands these three advantages, because he recognizes when one of them is gone, he's finding success way outside of this high probability trend trade. You're going to see a lot of that in this room. That's cool. That's where you're headed. So don't be the trade police. I won't be the trade police. We're just going to talk about advantages, what we did great, what we could do better. And if I think you got lucky, and guys, every now and then you're going to get lucky, I don't mind telling you, because luck, especially for new users, it's a short-term victory, but it typically leads to long-term failure because luck runs out. It's like they have cameras behind you. So I'm going to leave you with the S&P, and we are currently into a termination condition. Price reached Fibonacci support. None of the triggers broke. The triggers are weak. I'm not going to look for an entry because my large chart rules aren't met. That termination condition reversed the market. This is now a strong top. My smalls are below the large. There's space between the two. The large are beginning to open. I have momentum. And the market pulled right back to the mid-band, right in the retracement zone. But because the triggers are pretty spaced out, there was a lot of risk going into this trade, but it fit the rules. The bounce happened, and guys, it's moving down. And it's pretty cool when that happens because that's what we just talked about for an entire hour. You'll also notice that at this termination condition, there were three divergences in the same price range, letting you know that this change was on its way. So I'm going to go stretch my legs real quick, guys. I'll be back in about 5 minutes. When I come back, we're going to start posting on all the pictures. There's a lot of them. I'm excited about that. I want you guys asking questions. I want you guys saying, Mark, that is absolute garbage. Let's talk about it. And I'll say, yes, here it is. Here's how we get to the rules. This is what we're looking at. This is why. Because the whys are the recipe for future success, guys. I'll see you in about 5. All right, guys, I am back and ready. Pete, sometimes if TV is rejecting your order, it means that you don't have enough funds. So I don't know if you're sim. If you are in simulator, it limits you. It's just like the real market. Um, it happens sometimes. That's all right, Better Dad. So, guys, I'm going to scroll up to the very top and I'm going to start clicking on the pictures that you guys have posted. Um, we're going to talk about them, what they look like, what you did. Cav got us going today. And I want to remind you guys that I have to scroll from the bottom to the top. So there's a chance that I'm going to miss a picture. So every time I have to do this, I have to scroll, 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 and I miss pictures sometimes. Don't be afraid to tell me, hey, Mark, you missed a picture. But also understand that when I'm up at the top here, I can't see the messages in the bottom. So we're getting there. This is Cav saying, check it out. So who asked that? James. Or Jared, sorry, Jared. When we talk about a strong trending market, this is the only time we talk about a strong trend is when there are 30 plus bars in the same direction, no reversal bars. And when you have that strong trending market, what happens is you see those small triggers ride the large triggers. That is the only time that we ever refer to the trend as strong. And what this look tells you is that the momentum is good, that the market is screaming, that they have no intention of stopping, that you can tell. And what Cav did is said, well, with this look and absolutely nothing in the way, I'm just going to jump in and ride that momentum, make a little money, get out in case the momentum stops. And then when it does and they push down, I'm going to get back in on the way up with this look and make money again. And Cav, awesome, awesome trading. Then as you start getting closer to Fibonacci, I want you guys to see this. This is pretty cool. When we talk about decisions made at areas, Cav, I didn't even see this one, but we're going to turn this into a lesson. This is one of the cool things about Fibonacci, and one of the things that amazes me all the time. Oh, Pete, those are wiped out. So yeah, if it was with John's card, those are all wiped out. So check this out. And guys, I make up these little stories to try and get you guys thinking about things. So that's my decision-making area. Does that make sense? Fibonacci resistance. The buyers have been in control. The sellers have had absolutely nothing. But when they reach 21.5, 27.50, the buyers might stop pushing. The sellers might push harder. I don't know what the decision's going to be. And look at this. So as we get close, the sellers test the water and there's a loss of momentum. And as we get closer, the sellers test the water again. What kind of fight am I going to get from the buyers? And when we're almost there, you see that third test. Guys, this is the sellers going, okay, we're getting close. Let's see how much the buyers fight when we push down. We're getting closer. Let's see if they've got it in them. And the buyers had it the whole way. And now we're getting closer to it. And guys, you can see that the sellers are starting to steal momentum coming into that decision. Maybe the buyers are taking profits and then pushing up and taking profits and pushing up. But those divergences coming into that key area, that lets you know there's some decisions going on. You don't have to be a part of the fight. And then Cav, you're just doing jump in, jump out, jump in, jump out. One of the things, guys, when you have a strong trending market and absolutely no termination conditions, buy the mid band until it stops working. Do you see it, Cav? Mid band, mid band, mid band. That is the general consensus, guys. When you have a strong trending market and nothing in the way, just keep buying that mid band until it stops working. It will stop working. You will take a loser eventually, but sometimes you get blessed with all these amazing runs, which is pretty cool. Great trading this morning, Cav. Really nicely done. Taking advantage of a strong trending market. All right, Pete. And just before Pete, hold on. Happy hamburger day. Thanks, Gary. I'm going to have a hamburger today. All right, guys. Pete is going to show pictures on two platforms here. First one, odds favorable, weak bottom, potential to break. And guys, this is that idea. Pete lets the market get above the decision-making zone, momentum on both charts, and he just jumps in. Makes $100 here on 3 contracts, and then takes the balance off when it starts to slow down. Freaking amazing trade, guys. That is a 300 plus 120. That's a $520 trade over the course of probably a couple seconds with the momentum. And now he's doing the trading view. And guys, there's a lot of you that are making that transition over to trading view. There's a lot of you guys that are like, oh, I can't wait to be a part of Nexgen funding. Let me go through trading view. And what you did here, Pete, is you have momentum on the large chart. You have nothing in the way on the large chart. And what Pete says is this is pretty cool. When I pull back to the zone with all that momentum, I'm going to go long. And that's exactly what you did. And it was beautiful. Break a zone, break an area, test an area. Strong triggers leads the way. Market goes up, he gets paid. Market continues up, he gets paid. Pete, what do you think on TradingView? And this is for those of you guys that are taking the switch a little bit. On TradingView, have you noticed lower risk trades because of the minute bars? I have in NASDAQ. Excuse me. I've noticed lower risk trades, which is pretty cool. And it seems like you can find bigger moves because you don't get caught up in the fluctuations as much, maybe. I'm a huge fan of both. You did it great here, though. Entered on the pullback, the mid band, the white bar, right on. Close above the triggers. Trend trade works. Off it goes. That's it. What a great looking trend trade. They suckered you a little bit there, Pete, because it hadn't quite gotten to the mid band. And then that's your one that closes on the right side. Pretty cool. And look how well the trend trade works, guys. Amazing. Really great work, Pete. I'm excited to see you guys doing this one. Yeah. White bar pulled you in. It happens. Momentum, potential to break. Guys, this is the Nexgen momentum trade. Everything's up. Break it, snap back, giddy up, make money. Pete, great trading this morning. Not one high probability trend trade in the whole bunch, but an awesome, awesome display of expert chart reading, great execution, wonderful management, and profits. And profits are what it's all about. And Miss Jen, we're going to give her the microphone next week. She's going to teach you guys a lesson on these 50-50 trades, these potential to break trades. And she's giving you guys the most important lesson that she could ever give you today. And this is pretty cool about this community, is sometimes you guys will post pictures and you didn't even take a trade. So Jen says, I have a strong top. It's a termination. My trigger's rolled. I had odds favorable momentum, but it's one of those 50-50 trades. And guys, a 50-50 trade means that this area has the potential to break. The only reason you would even define it as a 50-50 trade is because of the strong triggers. We're relying on momentum to break this area. Does that make sense, everybody? The path isn't clear yet, so we're relying on those strong triggers to give us the potential to break it. On your small chart, divergence is a loss of momentum. Divergence is giving up momentum, and if we're relying on momentum to break the area, this is the biggest killer of 50-50 trades. And Jen says divergence on a 50-50, rules not met, look what happened. Avoidable losses, guys. You could get nervous and want to be in the trade because maybe you haven't been in one in a while, and you take it anyway and you get run over and you get mad. Rules adherence kept Jen safe, not giving the money away, and then she believes in it. There's that divergence again, and sure enough, another loser. 2 trades not taken, 2 losses not taken. It doesn't take anything, it doesn't cost anything to not be in the market. And then, yeah, Jen, sometimes you got to go outside and get fresh air. Sometimes, guys, you're not going to be in a trade because you had to go to the bathroom, the dog needed to go out, you needed more coffee. You didn't miss it. It just wasn't yours. It can't be yours if you're not there. I'm not a fan of the phrase missed, because when I miss something, I try to make up for it, right? If I miss your birthday, I try to make something happen twice as special. If I miss my bus, I run till I'm sweaty and I'm not going to have any fun at work, whatever. So language for me becomes important. It's just not mine. I can't miss it if I'm not there. It's just not mine. It's not my money. I wasn't meant to have that today. That's okay. That's just me. That's my hang up. I think language is important. High probability trend trade, kinda. Why is it kinda? You have odds favorable. You have a clear path. Oh, kinda. Why are we stacking them? It's so much easier when they're side by side, but that's okay. So Better Dad says, and I like this, and this was a lesson from yesterday, I think. So the large chart had odds favorable momentum and it had a clear path. It was perfect, 100%. His small chart rules, entry rules, says buy a pullback at an area inside of triggers. Do you guys notice that his only area is on the wrong side of the triggers, where the market shouldn't go, where the advantage is gone, where rule number 3 isn't met? Does that make sense, everybody? But with the large chart perfect, what Better Dad said is areas can still create a bounce. I'm not going to put all my eggs in one basket and hope that it happens. I'm going to force the market to confirm from the area. I'm going to force a reversal bar, and then I'll take the trend trade because the large chart is perfect. And when you did it, Better Dad, easy money to the first target, break even on the second. Great job. I mean, this is awesome. And this is one of the lessons that we talked about yesterday, where he goes, well, I guess that's just not my trade. I said, well, here's one way you can work through it and make it happen. And I think you did it wonderfully. When rule number, excuse me, when rule 3 is not met, but large chart is perfect, confirmation bar for the entry, because it defines your risk. And you did it perfect, Better Dad. It was awesome, awesome. This isn't perfect, force it to go in the direction. Nicely done, man. You can be taught, my friend. One day I will too. All right, let's see who's next. Pete. Pete says, strong bottom, triggers rolled, odds favorable. Pete gets in at the area inside of the triggers. He did have divergence. This was an exercise in discipline. Pete gets in, and man, almost hits a stop but doesn't fill. This is the trading gods loving on Pete. And then it starts up. And he stays in his trade. He says, this chart hasn't blinked. This chart's not telling me to get out. And eventually he gets paid. Reduces risk a little bit behind the next reversal bar. Good stuff, man. And that's all happening right here. Hell, they even printed a fib in the middle of it. What a great target. Nice trade. Good hold, Pete. Those are hard. Those holds are hard. You've got to have some trust in that large chart to not jump ship. Pete's got it. He's got that trust. He's developed it. Takes time. Takes time. Takes effort. Takes pictures. Oh, and Aaron, we fixed that one. Pete, Anything can happen. Not odds favorable. Needed one advantage, so you waited until he had a clear path. Once he had a clear path, he did have odds favorable on the small chart. He just rode that momentum up to the fib. Nicely done, Pete. Good looking, taking advantage of that clear path and momentum on the small chart. This look 70% of the time reverses, just your observation based on this look over a month's trading. Got in this trade as the market starts down, hits your target. All right. I told you guys you were going to see some stuff, right? I told you you're going to see some stuff. So here's where I do it. Smalls up, large up, trend up, every indicator up. And Cav says, man, I hope that red line holds. There's other traders, Cav, that used to take this trade, and they got their ass kicked so many times that they stopped taking it. I won't name names. But there's a reason my brother wrote this book, How to Commit Financial Suicide. It starts with fighting triggers, trading into areas, man. Guys, this is an aggressive counter trend trade. Cav had his reasons. He took it. It's his trade. It's not my job to judge it. But I will say, you're going to lose this one more than you win. Because even with weak triggers, that didn't stop it. With strong triggers, it blew right through it. And what you've got to do, guys, is you've got to go through and you've got to say to yourself, what happens more often? Does it hold or does it not? So I think it's important, and Cav probably had super low risk on it, I'm assuming. That's an aggressive trade. Good job, Cav. It's your trade. Love it. Embrace it. Make it yours. I don't need that money. I don't need that money. I've got high probability trend trades. I don't have to make $100 fighting everything. I don't need that to reach my goals. All right, better dad. Strong triggers, clear path, pull back to the area in the retracement zone. Easy money, better dad. Guys, that's it. That's a high probability trend trade. Strong triggers. Triggers are above the previous area. Price hasn't reached the next area. He enters 2 ticks above support inside of the retracement zone. Knew exactly where his risk goes. Initial stop here. A lot of risk, but trust the pattern. That's a $300 trade. Better dad, that is amazing. I think that is something that the men and women learning these trades could study. And I'm going to put you right by Boaz. Another one of those boring trades. There you go. Look at that one, guys. It's a good one. All right. Pete hit the zone. HVA. You take a late entry for sure. Easy one. So what you took on this one, Pete, I like this. That's okay, Cav. It's a great lesson for the newbies. And I want to say that it is a great lesson because I don't mind saying it's aggressive, it's counter trend, it's low probability. I don't mind saying that. It doesn't mean that you did anything wrong. It means you took a calculated risk based on your ability to read the indicators. That's wonderful. That's my hope for all of you guys. Guys, so what Pete was doing is Pete's taken what's an HVA trade, which means that when you reach a zone, if those small triggers roll, the idea is that you're going to sell the pullback to this HVA line. He didn't get the pullback, so he just jumped in with the momentum off the termination and rode it down. And it's a beautiful trade. I like it. Pete, this white bar, once it prints from that termination, the high volume area on it, if there's a down bar, that's what produces the pink line. This is John Novak's breakout trade. White bar off the termination, and you look for that little pop back to those fast triggers, and that becomes your entry. Really great execution, Pete. And then Miss Jen was looking to sell at white bar trade, had order in, did not hit it. Cool. So this is the HVA trade, Jen. Termination, triggers roll, sell the HVA. Perfect. Perfect, perfect. It just didn't get you. Those sons of bitches. Sorry, that was probably. But I mean, but the rules were met 100%. It was perfect. Everything about it was a beautiful setup. It just didn't work. It didn't get you. No entry. But 100% perfect. Perfect rules adherence. Love it. Lonnie, I'm going to say you know how to annotate because you did. Nice job. So let's see. Lonnie says that the 15-minute chart was up. Yeah, I am a little bit. Sorry, Better Dad. And the one thing, it's not quite a momentum trade, Lonnie, because you don't have strong triggers on the small chart. But if your 15-minute chart was up, if everything was cruising, there was nothing in the way, what you did is you bought a pullback to an HVA line. And it's just a great opportunity because when the 15 minutes says everything is up, you're just finding an opportunity on that smaller, faster chart. And that HVA line represents the point where the buyers got together and said, hey, if they push back here, we're going to unload and try to push up. Really nicely done, Lonnie. Sorry, guys. I'll check my language. I'm an HR nightmare. I know that I am. I don't mean to be. Price pivots from the divergence. I disagree. Price didn't reach the divergence. Guys, these divergence lines are precise. These divergence lines are 100%. That is the exact price, 100%, where the sellers stole momentum for the buyers, where momentum is lost and they push down. So when you're talking about using this line, price has to actually get there. It is a deliberate line in the sand. And if it falls short, it falls short. So what we have is that 50-50 look. And that 50-50 look didn't work. And Cav said, odds favorable, potential to break here. Let me take a pullback. And Cav, you're missing triggers, brother. You're missing synthetic triggers? You're missing synthetics, and it's weird that your large would be that wonky when all of this is so strong. I would reload the template on there. Something doesn't look right. I would go through, reload historical or something. Something doesn't seem right there because this is down strong. It's surprising that these would be so flat. So I don't know if it's the wrong template, but I like it. All that strength potential to break. Beautiful short. But we're missing a little bit of information there, I think. And that's okay. Who was this? Steve Diego. Steve, thank you for giving me 1,000 things to try to focus on. I'm going to go with your Ninja Trader first, man. Strong top, triggers roll. You take the short, and with the gap theory, Steve, are you with me? With the gap theory, you know that's where you got to get out. I want to do something real quick. This is where price is most likely to retrace. Does that make sense? From the bottom of the triggers to the top of those triggers. This is your first bounce point. You got a little jumpy, and you're like, oh my gosh, it's going to go without me. And you jump in, and then it goes right to where the market was most likely to continue down. Great way to reduce risk, great way to maximize profit potential by forcing it to the areas of the triggers. Does that make sense, Steve? It's a good look. You just jump the gun. You just jump the gun a little bit. Because it went right to where the pattern said it was likely to go. And then when it hit that 1-to-1, when that divergence printed, that's when the gap theory kicked in full tilt. Good stuff, man. And then over here, not a good short entry. Price hit support. Triggers roll, close above the triggers. Was support zone here at the time. Better entry short. 745. All right, so you had a termination right here, but the triggers are definitely up strong. When they rolled, you said you could have taken a potential short, break below the zone, retest it after the term. Without the HVA lines, I bet you there was probably one there. And then take it right down to the zone, and when the zone holds, get off. Perfect. I like it. It's a good read, Steve. It's a good read. Nicely done, man. It's fun watching you guys transition over to the trading view. One of the things, and this is just me, I like to be able to read stuff. I like to see stuff big. And that's just me. Not everybody's like that. I like to see my large chart and what it's doing. I like to see my small chart, where it's been. You would have never entered where you did after seeing the 1 minute. Hold on. Because at 59.38, honestly, well, where did you get in? Let me see if I can line up timestamps. 23. Oh, so it was over here. Your entry was right here. I don't know. That's a pretty good look. That's odds favorable momentum. After the termination, it just didn't work. Note on the left, follow the dotted line. The support zone 101 should have taken both off. I agree. Note on the left, follow the dotted line. What does that mean? Not a good short entry. Price hit support. Oh, you got in right here. Got it. Yeah, I agree. Sorry, it took me a second, Steve. You got in against the fast triggers, not with the fast triggers. Big difference. Okay. Thank you for that. It took me a second. Darn shiny stuff in the room makes it hard to focus. So, today's trading view lesson. Don't fight those triggers. I'm telling you. It's horrible fighting those triggers. It's hard to win. It is so hard to win fighting those fast triggers. Good stuff, man. Good stuff. All right, guys, I think we made it through all of your pictures. There's that gap theory again. Price reaches the mid band. Large triggers were a full bar away. Sure enough, it closes the gap to the large triggers. We've seen that one once or twice. Did you, Bob? Well, you don't post in my room anymore, so I've learned how to tune you out. I've been hurt. Not really. I just missed it. Thank you. I do miss them sometimes. All right. Strong bottom. Odds favorable. Let's figure out where you took the trade. You took the trade right here. So weak triggers. No clear path. and you say everything is screaming, let me jump in and let me get paid. Could have moved to the upper fib, right, Bob? And if I was better looking, I could have been a movie star. I don't mind redoing them better, Dad. AFK. I don't know what that means. Maybe that's just away. Maybe that's a shortened. Away from keyboard. All right. You teenagers in your language, I can't keep up with you. Guys, Bob said, let me get away from the decision-making zone. And he could have traded to the decision-making zone. It's a great trade, Bob. Nicely done. And then better, Dad. Which one was this? Odds favorable. Clear path. Nope, I hadn't seen this one yet. I don't think. Maybe I did. Odds favorable. Clear path. Pull back to the area inside. Stop hit. No, it's a perfect trade. You had every advantage. You had every advantage, better, Dad. One thing, and the midband may not have been there when you took it. One of the things you guys are going to recognize with a little bit of time is that the first entry is almost always the best entry. And the more a market bounces before you get in, the less likely it becomes that you're going to win. Because what's happening? Right here, everything is perfect and nothing has changed, right? By this one, we've already had 2 losses of momentum. Small triggers got below the large. I'm not calling you out. I'm just creating lessons. It's a great lesson for everybody. And if you're in at 48, you made your $100 and you're out break even. And this is where trust comes in. And if you're not in front of the computer, you didn't miss it. It just wasn't yours. But one of the things that you have to do is you have to say, all right, it's dying here. And one of the things about a second lower divergence is very often a second lower divergence will push the market a little deeper in. But you can see the change. I like it. It's still rules met. Stop still in the right spot. And that's going to be one of those things that you begin to realize over time is that the first entry is almost always your best entry. And the further you get away from that first one, top step, PSA, the less likely it is to go. Because one of the things, in the hope, better, Dad, and this is how John explained it to me, and you'll see this a lot. Have you guys noticed that when you take the right trade, when you take the trade with all of the advantages, it typically goes fast. It's a quick trade. It's an aggressive rocket up. And that's what you're looking for, guys. The best trades typically go the fastest. So the more they waffle, the more that fight's happening. It's just something that you'll begin to recognize. And then Gary says, in case people don't know this, when your Ninja crashes, you can close your positions through Rhythmic. Assuming you're using Rhythmic, keep the position tab open and you can immediately close out any position. Just saved your butt. Awesome. So guys, if you're using Rhythmic, whether it's Top Step or whatever, you should always keep that second open. You should always keep that available so that you can close out any positions if Ninja goes away. Good PSA, Gary. They tell you to. Or Trade of 8. They tell you to. They tell you to when you do it. Keep it open in case something happens. Steve Diego says, for those considering Chart Prime, you used code SMARTTRADE50 for 50% off of $67 a month. Dude, that's awesome. Thank you for sharing that. And Chart Prime is what makes the zones, guys. Chart Prime is what puts those zones. And those zones tend to work. Here's my S&P read. Directly into one-to-ones. How do you guys feel about the market trading directly into one-to-ones? That's it. So Gary, back in the old days, I had the NinjaTrader trade desk speed dial on my phone. So if something happened, I could call the trading desk. And it was a little slower than the electronic, but guys, that's been a thing for as long as trading electronically has been a thing. You need to have that direct line to pull in the chute, without a doubt. Good stuff. And we all learned that lesson the hard way, at least once. There's crude oil coming off of the termination conditions. That is an eternity on NASDAQ. There was your trend trade, guys. Everything is down, room to the target, pulls back to the mid-band, there's your close below. Trend trade worked beautifully. That's a crude oil trend trade. What did it look like in crude oil in real life? It was that one right there, guys. They recalculate, Steve. I don't know what the magic is behind it to make them recalculate, but chart prime zones recalculate. Same way fibs do every 2 hours. If you look at these charts, one of the things that you'll notice is at 8 a.m., there's a fib update. 10 a.m., there's a fib update. 6 a.m., there's a fib update. Because the market goes up and down, it creates new levels. So it's actually kind of a blessing that they recalculate, because they'll go through and they'll identify kind of the most current. Need to take pictures of the time. Just trade what your charts say, right? The cool thing is guys, these zones are great targets. These zones are amazing targets, areas of concern. If you look at the plan, most of them say just don't trade into it. Don't trade into the plan. Trade with momentum. Trade from a mid-band on the correct side of the small triggers. When you look at the trading view plan, the zones are being used just like the fibs are, guys. This says, hey, guess what? Decisions might be made here. It doesn't guarantee, but it gives you a little bit of, hey, let me hold off and wait and see what the reaction is. And let's see, just for grins, this is fun for me to do. Let's put a circle around it right there. That's a big circle, huh? Everything was going up, and it just kept going up, right? You knew that there was a zone there, and you got different things, but if you never fought the fast triggers, there's your trend trade, boom, pulls back, doesn't quite make it. There it's off the HVA, everything says up it goes. So you're going to get in sync where you're just like, okay, I'm going to get above areas. I'm going to trade 2 areas. I'm going to trade with momentum. I'm not going to fight momentum. I'm going to trade from pink lines in a mid-band. I mean, that's gorgeous right there. That's the perfect trend trade. Everything says down, hasn't reached the zone, pulls back to the mid-band, and it closed below. And if you were in at 76, guys, that was a pretty good run down to the next zone. And that next zone creates a bounce. And now we're kind of in a little moment where there's nothing to do. So I like it. All right, guys, 11 o'clock. I am going to walk around in a circle for 2 or 3 minutes, and then when I come back, it's your class. So when I come back, it's going to be up to you to tell me what we're talking about. It can be TradingView, it can be NinjaTrader, it can be patterns, it can be rules, it can be whatever. I am going to come back and I'm going to give you a lot of the study tools for TradingView for those of you that are going into it. And then let's just have any discussions you need to have, guys. I'll be back in about 5. Um, man, it's holding, isn't it? It's almost like somebody knew about that fib. And look at your small chart reacting to it. Look at the bounces. Look at the fights. Look at the up. Look at the down. Guys, you don't have to be a part of that. This would be one of those times where 90% comes into play. 90% of your day is just doing nothing and waiting and being patient and understanding that there's so many opportunities in the market. You just have to find yours. Look at that fight. There's a lot going on. It's FOMC day today, guys. Um, the minutes are coming out. You can see the fights. But look at this. Support breaks, it becomes resistance, continues down. Bad bottom, they push all the way up, continue down. They make it to the fib. Guys, they knew about the fib. I mean, just fights and bursts. Fights and bursts. Find your advantage in the burst, guys. What do you want to talk about? What's on your mind? What do you need help with? I don't know. Me either. So let's do this, guys. I'm going to give you some stuff in the room. I'm just going to hand it over. This one is Trading View Indicators. Just a little document I put together to identify the parts. They're the same parts that you're going to see on NinjaTrader, guys. Triggers, divergence, those losses of momentum, one-to-ones, mid bands, and then the outer bands are kind of a new thing. The outer bands are just kind of points of exhaustion. And then zones, areas to trade to, areas to trade from, guys. Just drop that in the room. That's just so you know what you're looking at, the same way we do it with NinjaTrader. Here is the TV plan. And the TV plan has it has your workspaces if you need them. It tells you how you're going to use the two different charts. The 15-minute chart, guys, this is your roadmap for key targets. Turning points, termination. So the trigger lines on this chart will define the direction and overall momentum of the market. Both triggers in the same direction is best. That's the best of the best. To go the other way, you need at least the faster, smaller triggers crossed in your favor. There's some examples. The 1 minute defines the immediate strength of market and entry points. Look to buy pullbacks into a zone that's broken and being retested. Entries where they can be taken from, and then guys, checklists for the trend trade, for the HVA trade, for the momentum trade, some example trade looks. So now you've got that. What am I looking at? How am I going to put it together to create a trade? I'm also going to give you, as we get into this is a PowerPoint that I put together, but it's in PDF form because that's easier for most people. And it talks about the high volume area trade. Zone reached, let it roll, buy or sell a pullback. Same thing Nexgen's been teaching for 20 plus years. There's the zone reached, there's the triggers roll, there's the sell the pullback. So a visual for you as you go through and study trades. The trend trade, no areas reached, no areas reached, buy or sell a close on the correct side of the triggers. Clear path, sell a close on the correct side of the triggers. And then the momentum trades, guys. When everything is screaming in the direction of the trade, let it snap back and buy. We've seen quite a few of those today. So those are all there for you. Better Dad? I love that, Claire. Strong triggers, clear path, didn't work. Strong bottom, odds favorable, maybe not. Considered and buy stop market here, but pass since the gap theory was in play on the large charts. I think that you have a mid-band behaving as a termination condition because those large triggers were a full bar away, Better Dad. And there is no momentum in flat triggers. If your synthetic triggers are flat, there's no momentum behind that. One of the things when we talk about momentum is that the triggers are wide. So if you look at where you're trying to get in, one, your small triggers are strong against you. It's that gap theory. They're going to make decisions. If the decision is to go up, That's probably where you would get in, right where you put it. What is that? The S&P? Whoops. I killed my Ninja Trader. That's it. They can't take what you don't risk. And the thing is with that gap theory in play, it means that the midband is a termination, which means that if you chose to take the long, you would be taking the long directly into the termination. Does that make sense? And I'm going to get mine back up. I somehow crashed mine. Yeah, I like it. It's a great read, and it's awesome restraint. Russ, you tried reinstalling Ninja to get the fibs, which you know are very significant, but you couldn't. Why? Now they only allow Canadians from Ontario. Nuts. Are there any sources of fibs on TV? There are none that I know of, Russ. I would have to do exactly what you did. There's zones which behave. Are you saying you can't get your fibs on Ninja? Am I reading that right? You can't get Fibonacci areas to produce on Ninja? Oh, you can't get Ninja at all. Really? That's weird. That's really weird. Have you talked to Jason about that to see if he knows anything? Maybe there's a loophole that we know about. In Ontario, that is east side of Canada, right? I know Jose, one of our guys, is up in that area, and he has Ninja Trader for sure. I would drop Jason a line and see if he knows anything about that. That's weird. But I don't know. Indicators, I like the chart prime stuff. I like the zones. Fib extension. I don't know what that looks like. Oh, so there is under indicators. I mean, you could go personal technicals. We'll go to technicals. I mean, there's all the different Fibonacci levels. You can go through and see what they are. If you need me to post pictures of my charts in the room so that you can compare. Let's do this. Just for grins. You tried a bunch, but no joy. Yeah, I think that's what John Novak came up with too. It's just there's nothing as good as Nexgen. On the hand tool, yeah. So over here you can do them. You can do the fib retracements for sure. Whoops. But one of the great things, Rich and Famous, is that we automated them based off of thousands of calculations. So Jared, this is so Jared, there's both available. Yeah, this is so much better, Rich and Famous. This is what Nexgen's been doing for almost 30 years now. Is creating these fib levels, and it's cool how it's done. You're clearly familiar with it. Guys, when your software opens up, it measures every swing, every up, every down, and it does every Fibonacci calculation that can be done off of that pivot. And then it looks like this. Like these are all of the measurements. And then the algorithm kicks in and it starts to weigh them and sort them and produces them. And then from all of this noise comes these amazing Fibonacci levels. And we're watching it stop the market to the tick right here. And we're watching it right there and right here. And it's amazing. And Jared, you probably haven't heard the story yet, you either, Rich and Famous, but when my brother was creating the algorithms to produce these, he did have a friend in the pits in Chicago, and his friend's job was to know where the investors, the big people, were buying and selling. And of course, he couldn't disclose that. But John would send him his fib levels every day. Hey, this is where mine are showing up. How'd I do? And it was when he was within a quarter 50 cents of where those big key potential turning points were. That's when Nexgen got released to the world. Um, Crazy accurate. I love it because even during times of like psychotic news, FOMC, watch it. Fib areas hold. It's amazing. Um, and then let me see. I know I missed one. So Jared, NinjaTrader has been where we've been for years. NinjaTrader is a great platform. It has a couple things that don't always work out the way you wish they would. But this is what you're looking at on NinjaTrader. And NextGen Software Services has been a company for almost 30 years. And we actually, if I remember right, it used to be TradeStation is where you started off, and then NinjaTrader hit the scene. And my brother said, okay, this is more effective. Let's use that. And that's what you guys that are getting software, this is what you're looking at. You're using it on NinjaTrader, um, and it's amazing. So it's not that we're using one or the other. Um, all of this, all the education, everything from the Next Gen software page is focused on NinjaTrader because NinjaTrader is how we've been doing it for years with it. It's amazing. Um, but hopefully today we launch Next Gen Pro Trader Funding, creating the proprietary, that's so hard to say, firm for you guys to get funded to trade our money instead of your own money. You guys probably remember the days where you used to have like, they would tell you if you couldn't throw 10 grand in the driveway and set it on fire, you shouldn't be trading futures. And there were all these financial requirements to get into the game, and it seemed very elite. Well, now there's these funding companies, and that's exactly what we're doing. And guys, you prove that you can be profitable. You keep winning, and you become a pro trader and make money. When you make money, we make money. It's a win-win for both of us. So what we're doing is we're opening the company, but in order to use it, you can't do it on NinjaTrader. It's not compatible. So John Novak did a lot of research, and he's got a great relationship with Ant Futures, and Ant Futures says, hey, check out TradingView. TradingView has 60 million users. Um, and, and, and TradingView is a great platform. It's different. It looks different. But guys, if you look at this, there's your zones, Russ, held like a champ, right? You knew exactly where it was, trade to it, don't trade through it. And sure enough, it reverses the market. Pretty rad how that happens. Um, so Jared, TradingView is an opportunity for next-gen funding to reach hopefully up to 60 million people and offer our services because NinjaTrader isn't an option. So if you want to use that next-gen funding, TradingView is one of the things. But one of the things that John Novak knows, and John Novak had a career in customer service before he realized he was brilliant, is that you guys are familiar with NextGen. You guys are familiar with what we've been doing. So he paid his programmers to try to make all of the indicators that you're accustomed to on NinjaTrader. Miss Claire, there's the PowerPoint. Sorry, I just saw that. Um, so he went through and he said, all right, programmers, this is what I have on NinjaTrader. I have trigger lines, small, large. We can use them to define the trend. Program me the same thing in TradingView. And they said, got you. And that's where these came in. And he said, okay, divergence is important to the plans that we teach. And same with one-to-ones, and same with the mid bands, outer bands. And he said, all right, program me some Fibonacci levels. And the programmer said, shoot dang, John Novak, we can't do it. It can't be done. We can't do it the way you've done it here. It doesn't allow, there's something in there that's way above my pay grade that doesn't do it. John said, well, we need something for the next gen users. And he used the idea of supply and demand zones, the same stuff that's taught in Janesh and Safia's class and the ALE courses, using these key Fibonacci or supply and demand. And this kind of replaced Fibonacci on TradingView because Fibonacci wasn't available. And then the same is true with the dynamic Renko bars. The dynamic Renko bars couldn't be programmed to mimic what NextGen has been teaching on. So we went back to the good old days, guys. everything was minute bars back in the day, and entries were closes on the correct side of the triggers. So it's nothing new. We've gone back to what's been proven to work for 27, 28 years now. Um, so we created all of the indicators for you guys to feel more comfortable as you make that transition so that you can be a part of the funding company. And the great thing is it means that when other people come and they want to use the funding company, guys, you got to have a plan, right? You've got to have a plan to find success. Now we're opening up the potential education to 60 million people to come in and use Nexgen and see these areas and recognize them and learn these patterns. So it's taking the tradition of training day traders to find success and it's carrying it over to the new endeavor. So that was pretty lengthy there, but that's kind of why you're seeing the two things, Jared. The one is what we've been doing, what's comfortable for a lot of people in this room, and we've stretched it over to the TradingView side to try and make the transition for you guys to come be a part of this funding company as painless and effortless as possible. And then having the Discord room, having the education room. There's been conversations about running a second class in the afternoons. I don't have the participation right now to warrant it. But if we really get going and people are coming over and doing this, guys, we're going to have another 2 to 3 hour class in the afternoons. It's going to be focused 100% on TradingView. But since there's not the need for it yet, guys, this is what this hour is, the last hour, is an opportunity for you guys to get as much feedback as you want on this all the time. You don't have to stop posting about your NinjaTrader stuff either. You like TradingView better? Right on, Jared. I had never used it. I started using it about, I don't know, maybe 4 months ago, 5 months ago. John Novak and I started working together. And I'll tell you what, I've got 3,438 pictures this year, and a lot of them are study from TradingView and patterns on TradingView and developing that plan for TradingView. And it's been a lot of fun. I'm a big fan of it. But I'm also an old crotchety guy and I hate change. So it took me a little bit. You know, it's hard to avoid the temptation to say, well, that's not what I'm used to. That's not what I like. That's not a fib. That's not this. That's not that. Because we get set in our ways and we get comfortable. But once you realize that it's really very similar execution, very similar rules, it's just dressed a little differently. I love TradingView. Good stuff. What do you guys want to talk about? Sorry, that was lengthy, huh? That wasn't even rehearsed. That was off the cuff. Novaks have the gift of gab, that's for sure. Somebody, cab member, developed the Unirinko bars. Right on. So did you put those on a chart? Cab mentor. Oh, they're locked, so I don't think I have access to them. That's kind of neat, though. Oh, that's just a screenshot. I don't know. It might be an option for you guys. I've never done them. Last seen 2018. I can tell you, John's programmers are pretty brilliant. And if they didn't feel comfortable with what they could create to be able to mimic what you were accustomed to in NinjaTrader, absolutely, Todd P. I'm just going to go with John and say, hey, it's probably not doable yet. And I always say yet because he doesn't quit. All right. Guys, we're going to talk about strong tops and bottoms real quick. They're not normal either. Right on. I love this. I'm learning more all the time. I'm so not the tech guy. I can't stress that enough. I am not a techie sorts. Maybe one day I will be, and I feel like I'm getting more techie every day, but not not there. I'm very right-brained. I am very right-brained. I'm very um, like the patterns appeal to me. I was an English lit major. The words appeal to me, so it's a little different view. All right, guys, we're gonna define here. Let's do this. Strong top or bottom lesson. All right, so let's define it first. A strong top or bottom is a no triggers through termination condition that reverses the market. So what that means is that, whoops, (50-50) is not rules met, guys. So if your small triggers get through, it's not rules met. So it's a no triggers through termination. Right there. No triggers through. No more long trades. This is your termination. So far, so good? So first, it's a term. And then, you know what, let's stay consistent. When large triggers roll from green to red, now it's a strong top. And the cool thing is that the recipe is the same, guys, every day. The recipe never changes. There we go. That's easier to read, isn't it? So it always, first it has to be a termination. No triggers through. If the triggers roll, it's a strong top. Does that make sense? So down here, not a term first. Man, how did that happen? Not a term first could never ever be a strong bottom. And it really is that basic. If it's not a termination first, it's not a strong top or bottom. If the small triggers break through, not a strong top or bottom. If it doesn't reverse the market, not a strong top or bottom. So one of the things you guys can do is you can really embrace language. And that language is going to keep you focused on whether or not it is. The same way I do it for, whatchamacallit? The same way I do it for how do I define strong triggers? Well, strong triggers are always a separation between the small and large, and that's what does it. And if I say the definition out loud, if I say strong triggers are a separation between the small and large, that doesn't fit the description. So I know that they're not strong. A strong top or bottom is first a termination. This doesn't fit the description, so I know it's not a strong top or bottom. So there's your very basic rules. I also dropped a little print out there about it, and this is for the new users. So let's go back and let's play the game. So guys, I want you to guess if you needed the lesson. Price did not reverse from an area. Strong or weak? What do you guys think? Todd, was it a termination condition first? It's weak. Perfect. All right. There's the reversal, but the small triggers broke through the area, which means that they pushed beyond the good stuff. So what do you think? Small triggers broke, strong or weak? No worries. Triggers got through support. So not a strong bottom. And this is why I think that the definition is going to pay dividends for you. So a strong top or a strong bottom is a no triggers through term that reverses the market. So if you always say to yourself, first it has to be a termination condition. Well, that was the potential to break. Are you familiar with the 50-50 look, Todd? 50% of my triggers got through, 50% didn't. That had the potential to break. It ended up not breaking, but because those small triggers got through, we're not going to call it a strong bottom. The same thing is true here. So price reverses, not from a fib. And guys, divergence, whoops. This divergence is not a termination condition. Divergence is only a termination condition when price reaches it and the triggers remain below. So even though there was a loss of momentum, it's not a termination condition. So even though it reversed the market, Todd, it's a weak top. And here's the deal. When we talk about the high probability trend trade, I don't care if it's a strong bottom or a weak bottom, or a strong top or a weak top. Because if I have odds favorable momentum and a clear path, I'm taking that trade. My advantages are there. But this strong top or strong bottom, that's what makes 50-50 trades more likely to work. So if you identify this as a weak top and you're thinking about taking that 50-50 trade, you have to understand that it's less likely to work. That's why a strong top or bottom is introduced. It takes you to that next trade. If it's a weak top, the 50-50 is less likely to work. Kind of cool, right? So it all strings together. Let's go back. Absolutely, Jared. Magenta, hot pink, purple, whatever you want to call it, that's from a high. And all it means is that the buyers were pushing and the sellers stole their momentum. You see that loss of momentum in the form of the magenta. You see it in the form of cyan at a low. And I'll show you what happens at these divergence areas sometimes and why we respect them. And here's a great example. I'm going to leave myself a little room for annotation for you guys. So right here, essentially what happened is the buyers were in control at that exact price. The sellers said no and drew a line in the sand telling the buyers if they try again, this is the exact price we'll shut you down. Does that make sense? Let me change will price. We may shut you down. So the buyers are in control. Whoops, wrong one. And they're pushing up, and it's awesome. And the seller said, nope, we're going to steal your momentum. And that's what creates this pink line. It's a line in the sand. And the sellers from there, they push down, and they're like, yeah, we said no, here we go, we're awesome. But the buyers had their key Fibonacci area, and the buyers said, well, we really want to go up. And they're going up, and they're not met with a lot of resistance. And then when they get to that line in the The seller said, dude, we told you. No, we're going to push. And they get a big angry push off that termination condition, that pivot stop out. Well, the buyers regather, they pool their money, and they push up, and they push up, and they push up. They're like, ha ha, we got them now. And man, they hit that darn line again, and the sellers are like, seriously, we told you. And what it is this is an exact number, and that's why just the loss of momentum isn't a termination condition. But when price reaches it, they're retesting. And if the sellers say no and push down, man, that's your termination, and you can see it twice. Does that make sense? I create these scenarios where I make voices for the people in control. And it's the same reason you'll see it all over the place. Sellers draw the line. Oh, take care, Cav. Buyers try to push, and they get fought right at the line. And there it is again. The buyers try to take over, and right at the line, the sellers give them a push. And sometimes there's just not a fight. But you know where the fight could be, and that's what's amazing, is you know exactly where the fight could be, and when you get to that area, you can make the choice. You can say to yourself, man, I don't have the control to break that line. I have to hope that there's a bunch of sellers behind me. So when you get to that divergence line, your ears prick up. You're like, whoa, hey, I may have to manage. And you can see how effective it is. And guys, that's 1, 2, 3 losses of momentum, 3 divergences in the same price range. And look at the reversal and what happened. Pretty cool, right? That's a pattern. Patterns repeat themselves all day long. When support breaks, it behaves as resistance. You see it a lot. When you reach Fibonacci support and the triggers don't break, it can stop the market. That's rule number 2. The area is not broken until both sets get above. There were 2 areas where the sellers could have taken over. You knew about it, and that's exactly what they did. Rule number 2, defining a range from resistance to divergence to resistance to support to divergence, and then they finally break out of the range and there may be opportunity. So there is so much information in these indicators. And if you learn to break it down first, if you learn to say, okay, I need momentum, I don't have it, I choose not to trade. I need a clear path, I don't have it, I choose not to trade. What happens is you don't keep hoping that things go down in areas that suggest that they won't. And you won't hope that the market goes up and just breaks every termination condition because you have a bill to pay. And if you keep it really systematic and pragmatic, and all you do is you talk about advantages when you look at your chart, what happens is you begin to recognize the edge. You begin to trust the edge. And when you trust the edge, guys, that's when you take entries. That's when you say things like, man, there's no way. Wild horses couldn't keep me out of this trade because this trade has everything I need to be successful more often than I'm not successful. That was a lot of wind. A lot of wind coming out of this face, guys. What do you want to talk about? That's great, Todd. Thank you for asking. Did that make sense? So price reached Fibonacci resistance. There's your termination. And this could never be a strong top if those large triggers don't roll. There's your termination. And because the small triggers got through, even though it reversed, we're just not going to call it a strong top. There's your termination. The triggers didn't break. There's your reversal. This is a strong top. And that strong top was 32 flavors of awesome all the way down to the termination condition. And that's what stopped its forward progress. So strong tops, strong bottoms are great, guys. They don't guarantee success. The synthetic triggers on the small chart, good question. Watch this. I'm going to circle my large triggers. That's all they are, Russ. So all the synthetics are the large triggers from the large chart. This is a good question. I'm excited to answer this one. And I'm going to go further than you ever wanted me to. You ready? One of the things that's true, this is moving average. One of the things that is true is that when price accelerates away from the large triggers, it tends to come back to them. And you see it, it creates the gap theory. You see it, it creates some patience. Price bars get away and they snap back. So one of the things that we know is true is that price returns to the large triggers. And you see it all day long. If you open up this large chart, you'll see price pull away and return and pull away and return, pull away and return. Do you see it? So it happens on a large chart, but it also happens on a small chart. So what we have found is that when your rules are met, when you have momentum and your path is clear, that's why we wait for the pullback and why we use those trigger lines to define where the retracement is most likely to occur. Price tends to return to large triggers. Well, large triggers aren't bouncy. So when you have areas inside, fibs, midbands, yellow 1-to-1s, you have solid platforms inside of the retracement zone to create a bounce. So all these synthetic triggers is the large triggers here, because if price may return to the large triggers on the small chart and price may return to the large triggers on the large chart, when you put them in the exact same place, your retracement zone is infinitely smaller. Does that make sense, Russ? That's some accuracy, and that's what, and I don't talk about it as much as I used to, but that's what creates the idea behind what we call favorable large triggers. Favorable large triggers means that they are overlapping one on top of each other like two snakes riding piggyback. Because when you have favorable large triggers, you have the smallest little range where that retracement is most likely to occur. And then when you put fibs, midbands, yellow 1-to-1s inside of them, you have the tiniest little window where the market is most likely to bounce. And this is the look, those favorable large triggers, that gives you the least amount of risk. I love favorable large triggers. But the reality is it doesn't set up as often as you'd like. So you have to use that concept that not every entry is going to be perfect. Not every entry is going to be super perfect, tight, one on top, right? But this is the best of the best. That's the one where I'm just like, man, can't wait to do it. That's the perfect, isn't it, Claire? And you see it all day long. So there's your termination. Pretty cool, right? Look at the reaction off the termination. Do you guys see it? I mean, just plow, blow. There it goes. Woo, the window of opportunity. You know, I used to always say window of opportunity, Claire, and then my brother typed in the room once, the woo, and I was like, oh, he's going Ric Flair on me. What is this? And he goes, window of opportunity, silly. I was like, I love it. But it is. It's a window, and that's where the opportunity comes from. So it makes sense. Not to be confused with the pit of despair. And then for you guys doing TradingView, it's very similar, right? Price pulls away from large triggers, and it pulls back to large triggers. And you see it everywhere. But because these are minute charts, it's not going to be the same concept of that window of opportunity. It's going to rely more on taking a close on the other side of the fast triggers. That's one of the differences between trend trades on the two. Steve Diego. Was zone there. Exit 1, exit 2, net 245. As you wish. Thank you, Andy, man. I knew somebody would get it. So, Steve, everything says down, right? You're below all the areas. You pull back to the mid-band, and you take your close on the correct side. That's a pretty easy trade, wouldn't you agree, Steve? I love the trend trades, guys. It takes a little bit of patience, Because if you're anything like me, right here you want to go, but it's too soon. Right here you want to go, but it's too soon. And if you just get in on that close, man, it's easy. You take your first exit at the first bounce point, second exit at the second bounce point, 245, man. Do that 3 or 4 times a day, Steve. You don't have a worry in the world. You're strolling down La Jolla looking at sea lions, looking to catch the perfect wave. And that's a good life. Nicely done, dude. Picking up quick. I think TradingView with the exactly with the zone of the midband, even without the zone, it's a no-brainer, I think. With that large chart look, that's totally a no-brainer. That's just a trend trade. That's all it is. Guys, that's the same trend trade Nexgen was teaching 25 years ago. Get to the midband, take a close on the correct side. I love it. It's nothing new. Steve, perfect execution. A day or two to get over the fact that it's not NinjaTrader. A day or two to study the patterns. And then if you are already Nexgen proficient, it's a quick translation. It's a quick move over. I believe that wholeheartedly. That's it. That's it, Jared. So I think even when you look at them, it may say, it's going to say T3, Fib 1 to 1, the T3 bands, and I believe they're Bollinger bands, inner and outer, I believe. It might be a Keltner channel. That goes back to me pleading ignorance. If you ask John Novak, he'd be excited to tell you. It's one or the other. It's either a Keltner channel or a Bollinger band. So, you know, I got a 50-50 shot of being right on it. This is why they don't let me program stuff. That's why they force me to teach you guys how to read it. That's what I'm better at. I'm better at helping you guys recognize patterns than I am talking about the technical side, but I'll try because it's fun for me. I'm trying to learn. Constant state of learning. Do I recommend the third triggers on the TV minute chart? Claire, you know I don't make recommendations, but I think it's silly to have 2 of them. Whoops. And one of the things that I did, and let me show you, let me go to settings. So when you go to inputs, I make sure that they are the same inputs for the small and the large. Or I may have just pulled mine off. Small trigger line, small average, large trigger line, large trigger color. I think I took one of them off. I don't need 2 small triggers. It's just too much for me. Too much for me. I get confused when I walk into buffets because I don't know where I want to start. So less is more. Less is definitely more for me. There's a way to do it if you want to get rid of it. Let me see. I think John put it on this one. Let me double check because I hate not having answers, but sometimes I don't. But I know where to get them. But I almost want to say that when he did the trigger lines, there we go. If your extra triggers range chart, click this button. If you wish to plot a second trigger from a different time frame, set it here. So I think what has to happen is they have to be the same settings. Make it the same time as the chart you wish if you wish not to see it. There it is. Okay. I had to go through. I was like, I know I'd seen it. I can't remember where. What's the S&P doing? Well, didn't reach that termination, so we're still going down. We're pulling into the mid-band. What do you guys think? If we get a close below the small triggers, does anybody want to go short on the trend trade? See what happens? Look how strong those fast triggers are, though. That's odds favorable momentum up. That might take a second to slow. Definitely not just going at the mid-band for grins. Does that make sense? This says down. I haven't reached the 1-to-1s, but my small chart's telling me, hey, we've got some giddy up to the upside. Let's let it slow down. Does that make sense, everybody? This is a trend trade. The trend is down, the triggers are down, the direction is down. Everything says down. I've got room to the next problem spot. This is my trend trade zone. I need a close on the correct side of those fast triggers for entry. That's what the plan says. Maybe this zone will help. Maybe it won't. We'll see. One thing you can do is you can put a timer on here. More settings, countdown to bar close, guys. If you want to see how long you have before that close happens. Go to settings, countdown to bar close. So I've got 32 seconds for this bar to form. Everything says down here. I've got a zone, I've got a mid band, and I'm looking for a close on the other side of those triggers. I've got 20 seconds until it happens, 17. Is everybody with me on this one? I know there's a lot of you that aren't using TradingView. Feel free to post Nexgen stuff in here if you like. 5 seconds, 4 seconds, 3 seconds, 2 seconds. Did not close on the other side. It closed in the triggers. I have to be patient one more time. I love the countdown. I think it was Better Dad that taught me how to do that. Thanks, Better Dad. I love it, guys. I'm learning. I'm in a constant state of learning. I'm trying to be better, more knowledgeable for all you guys. And there's a lot of you that teach me some great stuff. So Hamid, 15 minutes says down. It has not reached the 1-to-1s. So this says look for the trend trade. Does that make sense, Hamid? There's my mid band. I have a zone. But what I need, Hamid, is I need a close on the other side of these fast triggers. There's a lot of momentum against this. So if this one closes below, boom, I'm going to sell. And I'm going to put my stop loss above the pivot. I'm still fighting a lot of momentum. I'll put profit targets down here at the 1-to-1s. That's your trend trade, guys. This zone right here could create a bounce. If you wanted to take partials off, you could drop that down to 1, and you could just put buy ES1, take your partial trade off. Get me. There we go. So that was your trend trade, guys. We're watching it live. Let me get plot executions on real quick. I want you guys to see the entry. Trading, executions, execution labels apply to all. Okay. So you can see that I get in on the other side. I take half off, flat with that divergence. Maybe I go break even plus a tick, and we're holding for the next one. Hamid, did that make sense? That's your trend trade, 100%. Little bit of patience gets you in. I love it. How do you toggle off left, right, top, or bottom panels? What do you mean toggle off? Oh, okay, hold on. So I got you. Right here, Steve, if you click on that, you can go horizontal, you can go vertical. So that's what's going to do it right here, right next to where it says ES Futures. Guys, your trend trade is still working, isn't it? And if you wanted to, you could just take the second contract off at 200, just like the KISS plan. Get paid at 100, take the other one off at 200, make it a $300 trade. Guys, this is in the plan. So this is one of the things you're going to have to learn. Patience. How do you toggle this on and off? I don't know. Steve. I put my favorites up here. So if you have a favorite, like the circle, you can highlight it and it'll create its own little bar for it. I don't know how to make it go vertical or horizontal. That's one of those ones you would have to go. Hit the trading view Google. Sorry, man. I wish I had a better answer for you there. I've never tried to do it, so I don't know. Oh, look at that, guys. $300 on the trend trade. Pretty cool, isn't it? Did that make sense to everybody? Wait for the close on the correct side, enter the market, and we took it off. That's a little over $300. And I think there was a total of $150 of risk on that trade using the minute bars. And of course, I just took it off early. Everything says that we're likely to at least make 13 and a quarter. But why not get paid, right? Why not make $300 a couple times a day? Go play golf. Oh, no worries, Steve. If I right click on it, it doesn't do anything. This one right here. Dynamic supply and demand zones from Algo Alpha. This is the one. This is the one that John found as the free version. It's not as good as Chart Prime, but it'll at least give you something to look at. So Andy, yeah, one of the things John said is that on the large chart, the zones with Algo Alpha tend to be a little better. On the smaller chart, they're not as effective. But isn't that cool? I knew that this zone could create a bounce, and I got paid 2 ticks above it. Understanding where the market may go. I'll love it. You're welcome, Better Dad. I'm a fan, and this is just me, guys. This is my personality. I believe in making the investment. When I moved to Colorado in my early 20s, I knew that I wanted to learn how to snowboard. And I went and I bought a snowboard, having never snowboarded, because I knew that's what I was going to do. And I knew that if I bought the snowboard, I would be committed to learning. Snag it. You know you're going to do this for a living. That's your goal. Make the investment. Buy the tools, right? Man, Chart Prime for $33.50 is an awesome deal. Is an awesome deal. That's a small investment. Can you snowboard without toes? I don't see why not. The boots are pretty solid. I have toes though. Do you not? I bet you could do it. You have 7 toes? So you have plenty. You'll be fine. I hope there's a good story behind the 3 little piggies that went to market. I had a friend with only a big toe on 1 foot. He, when they tell you wear shoes when you mow the lawn because 7 toes, I love it. He took 4 toes off with a lawnmower. Don't know how you do that, but he pulled it off. And he used to skate with us. So I imagine you could snowboard. So you're already at the zone, huh? And it's right at the 1-to-1s. Well, you didn't quite hit it though, did you? Notice that your zone lines up with those 1-to-1s perfectly. So you came close to it, but you didn't quite hit it, right? We knew about the 1-to-1s. Same thing, you just happen to have a zone there, which means that's great. That means because this is a small swing 1-to-1, it means your zones are probably pretty effective. Good stuff. Guys, now the small triggers are turned against the trade, right? Now we're on the wrong side of everything. They're turning against you. We're coming off of the zone. These are up fast. If you're going to try another trend trade, if you're like, you know what, I'm going to try to continue with the overall, we're waiting for the close below the triggers again. There's your patience piece. No trades until the close. Does that make sense? We're still down. We still haven't reached an area. These triggers have turned, but this is a big slow chart. I'm at my mid band. I'm at an HVA. I'm at a zone. So what I need is a close below. Something that says, hey, we're on the good side of momentum. And the cool thing is, if it never happens, guys, I don't take the trade. What's up, Chris T? Sneaking in the room. I like it. Look at that. It's going up. It's not giving you entry rules met, which means that you're not wasting money. You're not hoping it goes down. You are in control 100%. You're saying it has to do this for me to do that. Pretty amazing. So there's a couple ways, Hamid. If I buy the market, I can just click the X. That's one way. If I sell the market and I hit the buy button, that's the other way. I like it. If I'm in a short position, I can scroll over and try to get that, or I can just hit buy. It's 100% equal opposite reaction. If I sell, I have to buy to exit. If I buy, I have to sell to exit. Still no closes, guys. Still no closes. Love it. I love it. I love having rules. Love having rules. Rules save me from myself when I follow them. All right, it's 12:05, which means it's 9:05 here. Steve, would you mind typing that in there again? Your discount code? Or better, Dad, you can also just search Steve's posts. I'm looking for you. I'm doing a quick scroll, but sometimes I miss things. I totally missed it. Smart Trade 50. There it is. Smart Trade 50. Thanks, Andy. Good stuff. All right. Did you guys get some answers today? You feeling good about it? Look at that. Still never got rules met. And it's going up. Yeah, I do. I've got the whole day ahead of me in Pacific Zone. We're hoping, Miss Anna, to hear about a house. I'm in Pullman, Washington right now on the Idaho border, and it's great, but I'm living in a hotel suite, and it's just not conducive. No, definitely not. We're traveling. I'll probably never buy a house again. Actually, that's not true. We're gonna buy land and get ready for grandkids and retirement. But until that happens, I'm gonna keep renting. But my wife's company, they take care of housing for us. It's hard to find in this area. It's real. There's none where we are, so we have to go up to Spokane. Hopefully, we get it today. Get out of the 500 square foot suite. It does have free breakfast though, and go get back into a 4-bedroom house. And they have basements here. How cool is that? Yours is on the market, moving east, North Carolina, East Coast, right? Different winners, that's for sure. We will be, our goal, so we're in such a fortunate, they do have basements in Colorado, Jared. When I lived in Colorado, we had a basement. So I'm in a fortunate position, guys, and honestly, you guys can all be in this position. You can do what we do from anywhere. 2 years ago, when my kids moved out of the house, your old alma mater, oh, I like that, UNC, huh? Chapel Hill's a nice area. We've been there once. You're in Charlotte. Claire, that's where my wife got her nursing license after she finished school. We drove up to Charlotte and she took her test there. So what we're going to do is, so we moved out. Well, my kids moved out, and we're like, let's travel. We've always wanted to travel. So, and this is one of the things that day trading does for you, what the internet does for you guys, is we went from Austin, Texas, and we drove through the Southwest, saw every national park we could see. Took 30 days to drive up to Oregon. I taught this classroom from Oregon in hotels and Airbnbs along the way. We spent 6 months in Oregon. It was a 6 month vacation. It was amazing. Her companies, her recruiters take care of housing. Um, is it? Everything grows, doesn't it? And then we went to Southeast Washington and went back to Austin to be with the kids. And the kids don't need us. So we started traveling again. And now we're in Southeast Washington again. But this time next year, we're probably going to be by you guys, Anna and Claire and Russ. We want to do the Northeast. We want to go see all that good stuff. And we're just traveling, having fun. Um, Pullman rentals are bombed out by WS party houses. Yeah, no, I don't want to be there. So right now, Better Dad, I'm on campus, like literally on campus in this hotel that we're in, but school's out, super quiet. It is super quiet. And yeah, we want to be out of here before school's back in. I want to be out of here in the next 5 days. Um, it's beautiful. Yeah, we won't be here in September. That'll be a deal breaker for us, 100%. We won't be here. When you grow up, you want to be like me. Well, Claire, that means you're going to have to not grow up. I refuse. I refuse. I like the little after class conversations, guys. Life is good. It's a fun community. It really is. Anything else I can discuss before we call it a day? Any questions? I know some of you aren't loaded in. Some of you are starting to load in. Remember, guys, the instructions are pretty detailed on being able to do what we do to get what you need. So if you're just getting into it, go get your demo on it. Create your trading. Thanks, Russ. I do appreciate that very much. I love to teach. I've always loved to teach. I actually went to school. Secondary education was my minor behind an English Lit major. Didn't do anything with either of them. I'm one of those people that's done everything, but I love it. It's such a kick to be able to help get you guys where you want to be. Um, Thank you for that. I never get tired of hearing it, so I do appreciate it. Guys, go enjoy your afternoon. Practice a little on TradingView. Look for your entries, look for your patterns. And guys, I'm telling you, take pictures, bring them to the room. We can talk about it. Bring all your NinjaTrader pictures. We can talk about it. My email works. You guys know how to get a hold of me if you need help. I'll be around. Um, and that's it. Thank you, Anna. I'm so blessed, but I'll always take more. You guys go enjoy your afternoon. If you need me, don't be shy. Take care, everybody. Y'all be good.